Good evening and welcome. This is the January 14th, 2025 Meetup group sponsored by Investors Business Daily. I'm one of the hosts. My name is Roy Maddox, and my co-host is Wesley Maddox, who happens to be my partner as well as my son. And we wanted to take this opportunity to welcome you to the meetup this evening. Tonight's meeting should be quite instructional as we discuss what's happening in the market currently, what's relevant right now, and what's relevant as well with individual stocks. So this is a group. It's a group comprised of about almost 3,000 members all across the country, all across the world, really, and people that are interested in the market get together once a month, the second Tuesday of the month, for a couple of hours, and we discuss the market conditions, the current market environment. We also share ideas regarding individual stocks. Most of the things that we talk about tonight are rooted in the CanSlim methodology founded by William O'Neill is so famous for. And that's also covered in his book, How to Make Money in Stocks. Tonight, we'll have many seasoned veterans on this call, many people that have traded for, uh, you know, 1, 2, 3 decades like myself. And we'll also have a number of new beginners that are just interested in the market and somehow they got wind of this site. And but moreover, what the one thing that we all have in common is just a love and passion for the market. And we believe that that everyone has the opportunity to change their financial destiny with the right perseverance, the right strategy, the right persistence, and the right risk management. So we'll talk more about all those concepts as the meeting progresses. And in the meantime, I'll go ahead and turn this meeting over to Wesley. Wesley will take us through a slide deck as he will discuss all the relevant monetary macro factors that are moving this market currently. And again, I'll spend an hour, hour and a half after Wes finishes to discuss individual stocks. And at that particular time, anything goes. We can look at all the stocks that we think are leaders, as well as discuss in depth stocks that you may have interest in. So again, thank you for attending. It should be a great meeting tonight. And with that, let me turn it over to Wes.
All right, thank you. Yeah, everyone, welcome again to this IBD meetup. So we're calling this January Jolt. If you've been following closely, you probably know this Jolt is related to the Jolt's report that sort of started or added to turmoil that we've experienced in the market. It's really since our last mid-January meeting. So we'll go over that a little bit more as we get into the meat of the presentation. But here's a slide, just what we're about. It's the Charlotte Investors Business Daily Meetup group. We have about 2,600 members now in that group. We say Charlotte, that's where it originated, and since then, since Zoom has become so prominent, it's unlocked the whole country and maybe some other people that are international even on this meeting tonight. So what we do is we try to connect with other people that are just like-minded like us. We want to talk about stocks. We want to talk about themes and topics that are rooted in How to Make Money in Stocks by William O'Neill. And so we'll refer to a lot of those concepts throughout this meeting as well. And here's a disclaimer just saying, we're just having a discussion. We're not recommending you to buy or sell any security. So please consult your investment advisor for actual financial advice. And, I mentioned this, I think, or maybe Roy did already, about this CanSlim acronym. This is a key portion of this, of the How to Make Money in Stocks book. It's about this acronym, and it talks about the leading stocks that all, have certain criteria. And so William O'Neill created this list of 7 things that he finds are the most important throughout history to finding those leading stocks. Current quarterly earnings, annual earnings growth in the past, new things, right? New products, new services, new management, stocks making new highs, supply and demand. So we'll talk about maybe some key volume indicators. We want to buy the best in the industry. We don't want to buy the laggard in the industry. So a lot of times there's a theme, and so you want to buy the actual leader. They're not the second, third tier names. And institutional sponsorship because that's what really moves the price of a lot of these stocks. It's not Aunt Susie. It's the big guys that have a lot of money to move around. And so, we look for the top funds and what they're buying. And most importantly, really, is market direction. And right now, we're certainly in the sideways, choppy action. You just need to be careful right now where there's a really indeterminate trend right now with a lot of pressure on the downside, a lot of distribution. And why that's important is because, when the market's going up, we're going to see 3 out of 4 stocks going up with that. When the market's going down in general, it's tough even for the leaders to buck that trend. Fortunately, there are a few that we think we've identified, and we'll talk about those later when we get into that section. And just to give a little foundation about how we look at things, this is what we call our process overview and the three pillars to our process. And we start with technical analysis, really, price action being the most important thing that we're looking at. Then fundamentals, certainly, we're looking at stocks that are going to change the way we work, live, and play. So that's key. And, we want to have accelerating earnings growth, accelerating revenue growth, things like that. And then macro being something that we need to, be aware of and provides, we think, important context to, to how you might want to trade. And we'll talk extensively about macro in this first part of the presentation. And so just as a more kind of background, technical analysis, if you're not as familiar, we're talking about price, breadth, sentiment, ratio. Again, we're going to go over a few of these things coming up. Price being the most important, and trend, really what, we consider ourselves trend followers. Fundamental analysis, we think that, CAN SLIM can encapsulate a lot of the important fundamentals that we are looking for. And so that's that's just the basis of how we look at things. And then just for your reference, Investors Business Daily, that's how we get a lot of our research. And you can use some of these things as well. Market Smith, I need to change. It's Market Surge now, rebranded, but they offer a lot of different fundamental indicators that are proprietary and things like that on their different platforms. And now macro, we won't get into too many details right now, but how we look at things, as far as growth and inflation go, it's kind of the framework we're looking at to kind of understand where we are. And we'll talk extensively about inflation because that continues to be a hot topic. It was in the back burner for maybe a few months. People ignore it when the stock market's going up, and then when it corrects, everyone's looking for that excuse. And maybe that excuse is inflation, and it might be warranted, but we'll talk about why. Maybe it is, maybe it isn't. We'll just get into that shortly. So just a review of some things. The Jolts report, this is a report that was announced January 7th. This was the job openings report. This sort of shook markets on January 7th. That was, I think, a Tuesday. Last Tuesday, 1 week ago. And more job openings, meaning maybe the labor market's hotter, the labor market's tighter, so we're not going to see any relief on inflation if the economy is, rolling strong. And, maybe you're not going to get that service disinflation that people are looking for. They think maybe wages are part of that stickiness to inflation. And so this kind of gave markets an excuse to continue their choppy nature. Already, we had seen a change in character following that Fed report, or the Fed announcement, right, where they talked about, okay, they cut 25 basis points, and I think it was just a hawkish cut, right, is kind of how it was talked about. But anyways, people are looking for that data, right? If inflation is going to creep back in, what does that mean? What does that mean for rates, most importantly? And so here's the 10-year Treasury rate, and this is what Roy and I are constantly looking at and trying to understand, if there's going to be a peak in rates, because from what we've seen in the most recent past, is this 10-year is what really puts pressure on the market, especially in the last 3 years when we know inflation's just been the hot topic, um, and what's driven the market so much. So I just wanted to highlight, a couple things. One, we have the Fed, it cut, and perversely, we've talked about this, how rates started to rally. That's either pricing in longer term or inflation staying high for longer, maybe growth staying higher for longer or improving. That outlook, it's kind of unclear. Those components are always shifting, but the Fed cut, the longer end of the curve rose, and recently, strong labor market reports have driven rates higher once again. And I wanted to show this chart versus the S&P because it's very telling, what's been happening here. And it's interesting, right? You see back in July, for one, okay, the market rallies and it ignores the 10-year rise to a point, right? And then for whatever reason, mid-July, we see, the rates start to creep up and it drives that 3-month correction in the 10-year until the 10-year ultimately peaked right at about 5.0%. Back in October. And so we know that after that, about a year and 3 months ago, we consider that to be the real strong start of the bull market that's proceeded um, over the last year or so. And you see, that coincided with a very steep and pretty prolonged decline in rates. And again, this rally continued. So it's not like it's always an issue, but what happens is when you have this strong trending 10-year, right? We ignored it here. We ignored it until mid-November. There was the election, different things like that. And now at the start of December, we've seen that it started to take its toll again. So, currently we're in that phase. And I think part of the issue is when you see this trending 10-year, it's making a new high or, a 52-week high in 10-year rates. Everyone starts to question, when's it going to end, right? How high can it really go? Is it going to 5%? Is it going to 5.5%? So all those narratives come through, and anyways, that's kind of just that's what we've been dealing with. That's clearly what the market is fixated on at this moment. And then similarly, this is really the same chart, the same idea. You have this real strong trending dollar back in July, August, September. We just saw same thing here, August, November, December, a very, very strong trending dollar over the last several months. And then, again, this sort of this move in the dollar versus the S&P that's in that corrective phase. And all this is just happening alongside maybe there's some inflation fears, and it's a lot of moving parts. But the point is, all these things culminate into putting the brakes into the economy, putting a lid on inflation, and I think I said to Roy recently that rates are undefeated against inflation. So if the market can get the right 10-year yield to keep inflation down, they're going to get the job done, and then we'll move on from here. So, in the meantime, you can see that the market's been difficult. You can see that stocks have been kind of choppy. So we're going to talk more about that, how we're handling that environment. But this is the reality right now, and we're looking for these things to break, and meaning to break lower and end this strong upward trend, because ultimately they will. They absolutely will. Don't get too bearish. Don't get sucked into this narrative that inflation is going to take off again, that we're in 1981 and we thought we put a lid and we're going to get this double spike in inflation. It's just not going to happen with the 10-year yield reacting like it is. It's going to take care of it. But until then, just we have to be careful. The other thing I wanted to point out was oil. This is, this is all kind of coinciding together. We've got this big report for CPI tomorrow, but you've seen these periodic spikes in oil. We peaked right here back in October. That's one thing we were looking for as well in 2023 when we had that tough correction for 3 months. So again, same. It feels like it's very rhyming type of circumstance that we're in from just a year and a half ago. So that's kind of, I think that's our playbook still. We're looking for some kind of key reversal. Just like a stock has a key reversal, there might be, maybe the inflation report comes in hot tomorrow, it gaps high, the 10-year yield gaps higher and then reverses lower. We're looking for things like that to give us clues that the 10-year is done going higher. Okay, and I'll talk about the PPI. PPI came out today, this morning at 8:30, and it was, arguably a cooler number based on the, consensus, the pundits. The market initially reacted pretty well to it, and then kind of had a lackluster finish. Intraday, some choppiness still too. I think as people, realize, okay, PPI is one data point. We care more about CPI, and that's coming up tomorrow. And so here's a look at this real long-term chart. And you can see December, the consensus and the Fed nowcast is about 2.9%. It's going to come in somewhere around there, 2.9, 2.8, maybe 3. I'm not sure. But you see January right now, the nowcast is to tick lower again. So, there's a couple possibilities. It's hard. We have no idea how the market's really going to react. I'll talk about some reasons why I think they can react, why we think, it could react positively. Um, but that's the key thing, right? How's it going to react? And the fact is, maybe we've had this short uptick for 4 months, 3 months in inflation, and maybe we start to see it tick down again early next year. And that's kind of what I'm expecting. I'll talk a little bit about that too, why, and a big reason about this, and I've harped on this a little bit, and I just felt like now I feel like peak inflation fears accelerating, maybe happening right here. I wanted to go into the details a little more again this month. We've got core CPI. This includes the nowcast where, okay, we've taken this pause in core the last 5 or 6 months, and now we're going to resume our trajectory down to this normalized level. And, a reason why we're doing that is because of the shelter component of CPI, which I've talked about a bunch too. This is peaked. This is going to continue to fall. There was a brief pause also there, which is what we're dealing with, I think, in some of these CPI numbers and why we're not getting the full, downward trajectory to 2%. But we are on our way because this is a very, very lagged component. It looks at something like a 12 to 18 month, like a rolling average looking backward. But if you look at real-time data on shelter, which I think I've shown before, this is from Zillow, and they have these prices across the whole country, different cities and everything. You can see we're still well below trend in housing price changes over the last 2 years. We're still well below trend in rental price increases over the last 2 years, which is such a different thing than you're seeing in this very, very slow moving CPI number. Based on this CPI, we're still 3% or 2% above normal, but based on the real-time data, we're 2% below normal. So that's the next part. That's the next, I guess, shoe to drop, but it's just a very, very slow moving shoe. And so don't forget that this component is at our back for sure over the next 12 months for disinflation to continue to take hold. But in the meantime, the markets they do what they do. They gyrate, they fluctuate. Right now, we're back at fixation on the Fed. I think the base case is getting to be where, okay, the Fed doesn't cut. We will see. It's looking like it's certainly not, I mean, it's not going to happen for 6 months, most likely. So we've got a pretty near certainty that, I guess, that the Fed's not going to cut in January. Here's the outlook for the Fed funds rate too over the next year. And you can see how much that's changed. So the black line is what we have today or yesterday. Here's a week ago, what we expected. So clearly a week ago, we were pricing in more cuts, getting to 4% by the end of the year. And then a month ago, we were looking at 8%. So another cut. So since just a month ago, we've maybe priced out 1 to 2 cuts less by the end of the year. So Anyways, the more this happens, the more, we can say we discounted that kind of worst case scenario, as far as, the Fed and easing. But the thing about it is we don't really have to fixate on what the Fed does. Markets are reacting in real time all the time. So, this is the 1 year and 2 year. You can look at these every day, and that's the predicted path essentially of the Fed. You can see that the path has changed. The path has changed dramatically since they began their easing cycle, where these 1 and 2 years have increased. So that is effectively tightening quite a bit over the last 3 months. The Fed hasn't tightened, but the market has decided it needs to tighten, and maybe rightfully so, because we don't want inflation. And I think it's good that the markets work as they do, and can decide on what the correct rate is to tame inflation and keep us on a path to stable growth. And so one thing I wanted to call out too, because all this goes together, this the interest rates and the CPI. If you look at the real rate of interest on the 10 year, so that'd be the 10 year minus the CPI. This chart is looking at the real rate in gray here. It's just a 5 year chart, but it shows that this is the highest real interest rate. So it's the highest spread we've seen in 5 years. I do have a longer chart, but it's probably several, or I'd say 20 years probably, the highest real rate we've seen. So that just crested 2% as far as the 10 year minus the CPI. So, you think about that, that is effectively as tight as we've been um, since the Fed embarked on this tightening cycle. So, effectively looking at that 10 year minus CPI, you can get the largest 10 year return. So that's telling you quite a bit there too. Um, so even if rates stay unchanged and CPI continues to drift down, that's effectively tightening as well. So, when that spread has gotten so big, it makes me wonder. It certainly makes me wonder. You can see back here too at the end, or in July when we had that big ramp, real rates didn't quite hit two. So, that's another sign to me that we might be hitting that upper limit that you could expect in the market. Yeah. So with all these things going back and forth, this whole 10 year yield that looks like it's going to 5%, it's gotten choppy. And so I just wanted to talk about some of these drawdowns and what we've seen across a couple indexes. And this is the FFTY, the IBD 50 fund. It's an ETF that we follow, and it includes the top 50 stocks that Investors Business Daily watches. And so it just is like what we use as a barometer of how our style might be doing currently. And so, of late, you can see that the style has been out of favor quite a bit, starting with this Fed day right here where things collapsed. Fortunately, we talked about this a month ago where we were de-risking. We were so tired of writing things down, and we thought, okay, offensively, we'll get offensively offensive in our selling. And a lot of the things we owned a month ago were very, very extended, and there was certainly some exuberance there. And fortunately we took that out, or we took a lot of off, maybe 95%, before that Fed meeting. And now here we are, we're not getting discouraged, we're dipping our toe in. Even though this is obviously not a buy like this index itself, but some of the stocks we'll talk about are setting up. It's a 12% drawdown. It's comparable to that ugly April drawdown that we had a year ago. It's not as bad as that 20% drawdown in August, which was, really, really gut wrenching, right? And that's a 20% drawdown to the very low. It closed maybe down 16%, just for more context. So, this is one thing that's telling us maybe, if this is a normal pullback, we could be there, right? We could be done, or we could be 75% of the way there, based on just a few recent pullbacks. And here's the Qs, the same kind of idea, just looking at the drawdowns. We're at 7%. April, we had that 7% drawdown. And then August, that much steeper drawdown of 15% with that huge spike in the VIX. on that low day there. And here's a look at the IBD mutual fund index. This is maybe the top 20 mutual funds that IBD follows, or they have this composite index. And so wanted to share this too. These are the top funds. These are the top funds in the world. And something changed recently, clearly, where this is actually even a much worse drawdown for them compared to the prior two, right? So, um, it basically we're at this point where okay, we're in a normal correction. Things are choppy, um, or it's going to get or it could get worse. It's really hard to say. We're lightly invested currently, and we're still continuing to do some things with dipping our toe in, but. We think there's reason to think the rubber band could be stretched, ahead of this report tomorrow. But, some of the things that have been piling up and should have been kind of hinting like, okay, we're not off to the races here necessarily. There's been no sign um, that we're about to, catapult into a new uptrend necessarily. We've seen distribution days pile up, and I think the current count from IBD is 8 distribution days on the NASDAQ. And so, you can see that first one here, and then 7 more, I think, from that day on that continued. And we had this huge, I think this was a record volume day actually, but maybe some funky things going on in the index there. But it was the most volume ever recorded on the NASDAQ that day too. And so, it's been distribution dominant, the tape. That's what, it's certainly not been, we haven't seen one accumulation day really, that's been meaningful. We did have this kind of fake out right here. Friday is when we dipped our toe in previously. And then Monday, we had some follow through. And then Tuesday, we had that expectation breaker. And that's the Jolts day. That really was an expectation breaker, signaling to you, hey, something isn't right. This is not how, a continuation of an uptrend should act right now. And yeah, again, that Jolts day, and that's why we're calling it that January Jolt. Right there, ugly day. And now we're below the 50, and we have some work to do on the indexes. But there are some green shoots that we'll talk about now too, where some things that might tell you, okay, maybe enough damage has been done, because under the surface it's gotten pretty ugly. And this is the McClellan oscillator for the New York Stock Exchange. We look at this regularly for our oversold, overbought conditions. This was the Fed day right down here. This minus 300 number. This is lower again than the April pullback, lower than the August pullback, which is shocking. Although again, it probably opened down here, and you had a real good close um, on that bottom day in August. But still, it gives you a decent sense of the damage that was going on, especially post Fed day. Since then, we're not oversold again, but we're at new lows on the Nasdaq. Similarly, we had a real oversold level here, very comparable to prior sharp pullbacks that we've had. And we continue to go a little bit lower, and we're nearly oversold. We're right on the cusp there today. And so other things that have happened that we might consider if we're washed out, and we're talking about being washed out in in a bull market uptrend, perhaps, right? You would think this is enough if we're in a bull trend, a bull market, and we're going to continue from here, and rates are going to peak, and inflation is going to come down again, and that's going to be the narrative going forward. But it's been quite, we got a big spike in new lows on the New York Stock Exchange. It doesn't compare to to October last year, but it's an elevated level to be sure. It's very elevated, and the same on the Nasdaq. Here's new lows on the Nasdaq. It does coincide with a peak, perhaps. Like it certainly seems that way. Here's a look at the stocks above their 20-day moving averages. This is a real short-term measure, but when you get to those levels as well, just pointing out nearly hit 10% of stocks above their 20-day on that day. A lot of times we've seen bounces from those levels. Here's April, here's August, right, where we had that low spike, and um, this had multiple spikes. That's obviously always a worry, but the thing is, you would think we're closer to a low with these sort of indicators. And just here's the Nasdaq too, the stocks above their 20-day moving average. Didn't get that same type of washout compared to the NYSE, just because the NYSE includes a lot of the smaller caps too, and we know the Russell's been underperforming quite a bit here. But these are all things that we're looking at that could be signaling that near term bottom, that near term bottom coming up. Also wanted to point out some sentiment things, not just breadth. So we have sentiment here where we've got the bull bear survey. We have the bulls at their lowest level since April. So not a whole lot of bullishness out there anymore. That's a long period of time to see a low in bullishness. Bearishness is near that high over the last 12 months as well. You had a couple of different spikes near 40%. So that's a pretty elevated bullish or bearishness there. And bears are actually outpacing the bulls, and that's I think the first time in um, gosh, I don't know, maybe 9 months since April. And this is the National Association of Active Investment Managers survey, and they ask this every Thursday, and they ask active managers how long they are. And you can see over the last year, when we hit that 60-ish% level, that's when we can put in a sort of a near-term low. Certainly, it can go lower. Again, it can. Well, these are all things that we're looking at. We're not, this signal to us out at near 100. This is one of the inputs that we were looking at that said, hey, maybe we need to lighten up because it's been very good at signaling near-term tops when you hit 100%. Well, now we're at 60%, and if this is just a pause in an ongoing bull market, then this could be low enough. And I think a lot of these factors are kind of coming together, I think, to say that. The put call ratio also, we like this one because it's a real measure of what money's doing. Not a huge elevation here. This is yesterday's number, so I don't have today's number for the put call to know exactly how high it is, but this is the 5-day moving average right up here. It's not at that huge spike level that we've seen in the past, so it's certainly not there, signaling like a real significant bottom. But we did get off of that complacency level. We were talking about that in November, December. Hey, be cautious, right? As you see that level of complacency down here where the put call ratio is low. We're seeing that turn up. 0.95 was yesterday's reading. I imagine today's reading was even higher because people are very, short term, and they're probably hedging for a hot CPI. It's in all the headlines, right? CPI is coming up. We're all worried about it, and so I would imagine this is an elevated number today. And one thing I just want to share too, further on that, this is a tweet I wanted to put in here from Mark Minervini. He's a trader. I'm sure a lot of you obviously know who he is, but he shared this, and I don't know his source exactly, but options traders are bracing for potential volatility, tied to that CPI report tomorrow. They're expecting a 1% move in either direction tomorrow, and that's the largest implied volatility ahead of a CPI print since the regional bank turmoil in March 2023. So, that to me is that's certainly a heightened level of fear. So, on the macro front, I guess that's my 2 cents, my 10 cents. I don't know on how I'm looking at it, but that's when you have that kind of number and we're talking about implied volatility being at a point as high as the days when 3 banks went under, over a weekend. That makes me wonder about how bearish we really should be. Roy and I we never lean too bearish. We certainly are always ready for the bullishness. And I think that some of this data that I've shared kind of shows you why we're close. We think we're close to that near-term bottom, and we've taken some positions, and we'll talk about that. We'll go over stocks actually right now. Basically, I'll hand it over to Roy to talk more detail about the stocks and talk about how we tried to navigate this the best we could um, over the last week or so. Really, it's just been about a week, just trying to see if we're going to get that traction. And there are some things that are certainly some leaders that are holding up and things we've gotten stopped out of. But we'll go over that and why we're still cautious. Of course, we're still going to remain cautious at the big event tomorrow. 1% volatility for an index is a huge day to be priced in. So, but we're prepared either way. We're prepared to go to cash. We're prepared to press our winners. But yeah, that's that. I think there's a clear path for inflation to come down though over time, and I don't know if anyone here is getting caught up in that narrative, but I don't think I wouldn't bet against the 10-year. That's all I've got. Roy, I don't know if you want to take a break or anything.
No, I'm good to go. I'm just updating some information here. Give me one moment.
Excellent.
And then
Okay. And I'll look at there were some questions I know that came up. I don't know if anyone's got if I can answer any.
Yeah, go ahead. Would anyone like to chip in any questions from where we are right now in terms of market direction, market sentiment, market direction?
What are your views on the various sectors which are doing quite well, energy or finance?
You're cutting out. We can't hear you.
What are your views on the value sector like energy or the banks, which seems to be doing okay?
What are our views regarding the banking sector, did you say, in value stocks?
Yes.
It's interesting. Let me come back to that in just a moment because I want to take a look at, let's take a look at the indexes. It's going to be in the slide deck, but let me just pull this up right now just so we can have an idea. In fact, the value sector, it's really full of financial stocks, and the IWM, which is interesting. The IWM reversed yesterday and today, which is interesting. We might be having a rotation going on from out of growth into potential value, into potential small and mid cap. But we've had this, this has occurred a number of times over the past year. And in every case, the market is sold into that situation. But it is interesting that the IWM, which is, of course, descriptive of a value index, although you do have the IWM of growth and IWM in value too, the IWM comprises both of the value and growth. You can't strip that out. But let's take a look at just a couple of things. Let me share my screen. Now, the financial sector, they start reporting tomorrow, and it's going to be important. And it's not necessarily important what they report, but what's important is the guidance that they prepare and present to us. So that's what we have to look out for. And give me 1 second here. Let me change my screen here. Okay, are you guys seeing my screen? This should be the NASDAQ. Do you guys see this?
Yes, we do.
Oh, okay, good. Okay, so let me just point out just a couple of technical attributes in terms of what's going on in the market. This is the NASDAQ. Now, I've got the MACD, the moving average convergence divergence indicator below on the panel at the bottom. So it's going to be interesting. right now the 10-day is below the 21-day. That's the green line. It's below the magenta line. And that means we are in currently a short-term downtrend in the market. And it remains to be seen if we're going to have a replay of like the June, July, August bottom, see where the 10-day crossed below the 21-day. And that was met with the whoosh down before the market finally bottomed. And in fact, that came after a Fed meeting as well. And it actually was day two. In the first part of that meeting, right here, the market actually gapped up, and we had a very, very strong market. The Nasdaq was up 451 points this day, and then I believe the CPI was reported the next day, and you had just a total give back and whoosh for 3 days. So it's going to be interesting to see if we have a replay of that, or will we totally shake it off tomorrow? But we are in a short-term downtrend right now. The intermediate term is still barely in an uptrend, where the 21-day, which is the blue line, it's above the yellow line. So by definition, we are in an intermediate term uptrend still. And again, the long-term part of the market, we are above the 30-week moving average. And 2 consecutive moves below the 30-week moving average is a very, very bearish signal. And in that case, and we've always been 100% cash when the market is below the 30-week for 2 consecutive weeks. So we're at a critical junction here. And it's going to be interesting to see if this MACD turns up here and we get a buy signal, or we have this whoosh down. You can see where the MACD might probe a little bit lower. So we have no way of knowing what's going to happen ahead of time. We just have to react and be aware of what the possibilities are, because we can't predict where the market is going, but we can manage risk based on what we're seeing in the current market environment. And that's what you should be doing as well. You should be managing the downside and put it on, trying, if you're so inclined to put on positions, well, if you've identified what you think are leading stocks and they're acting great. And we will get into the leading stocks that we think that are leading the market currently, and that may continue for the rest of 2025. We'll go over those shortly. But this is an overview of the Nasdaq. Now let's take a look at, oh, by the way, what was your downside? This is your potential downside, which is about another 6.5% on the downside here to the 200-day. You can see where we got down to the 200-day and kissed it briefly. And so we aren't looking forward to having just a whoosh which might occur over the next week or so. But if so, we'll be prepared for it. And we will, if we don't hold tomorrow, we will start selling some of the existing positions that we have just to reduce our exposure. Because, every 5 or 6% pullback in the market, or every correction in the market, every 10% correction always starts with the 5% pullback like we're getting right now. And every 20% bear market always starts with a pullback of 10%. So we have no idea where this market is going to bottom, but we do have, as Wesley stated earlier, we do have some empirical, anecdotal factors like the breadth and sentiment that are telling us that it's fairly negative. I would say much more than fairly negative. There's quite a bit of anxiety. So tomorrow is going to be a big report. I think that's why this meeting tonight is so meaningful, because hopefully you can take from what we're sharing with you tonight and have a playbook for tomorrow and be able to react after the CPI number comes out, tomorrow. So here's the Nasdaq. Let's take a look at the IWM, the Russell 2000. And the IWM, see where the IWM bottomed yesterday? Now look how oversold this indicator or this index is. And so this is the Russell 2000 that actually hit the 200-day. If you're somewhat of a contrarian, this might be an excellent time to add exposure in this index. And it's a lot easier. It is much easier to buy the index in the IWM than small cap stocks, because many of these small cap stocks that are in that index have very poor liquidity. And it's very difficult to establish meaningful positions by institutional investors like Wes and myself, because there's just not enough volume that's traded in a lot of these, in a lot of these names. But of course, a lot of these small cap stocks, but many of them are financial stocks and banking stocks and such. Some of these stocks turn into the next great leaders, over time, if they're able to grow their revenues, grow their earnings, and so forth. The market will eventually find them. So earnings drives everything, and earnings expectations really drives everything as well. So it's interesting that right off the gate, you've got a little bit of weakness, like today in the last couple of days. You've had a little bit of weakness in the NASDAQ, but yet the small cap stocks are bottoming here, and you can see the MACD is clearly exhibiting bottoming action. So it's going to be interesting. We're going to pay a great deal of attention to this. And again, lower interest rates are much more favorable for small caps. So if interest rates potentially are peaking right here, they're either the interest rates, maybe the index is telling you that, it's winking at you, so to speak. Maybe this index is telling you that rates are going to be peaking right now, and the small caps are going to come back in favor as rates come back down. So be aware of that. Notice that we're still in a short-term downtrend, but we are exhibiting bottoming action in terms of price. And the intermediate term, where the blue line is below the yellow line, that's telling you here that the intermediate trend is negative. So this is telling us no go, basically. And so stocks that would be in this index, they're going to be stocks that have been beaten up and we're really not bottom fishers, so to speak. But if you are so inclined, this would be the way to play it, I think, rather than buy a small savings and loan, small banks, or so forth. You could buy the indexes and get exposure from an asset allocation standpoint if you're so inclined. And
could you please look at the heat map of the market compared to the 1 month period?
Because your speaker is cutting out. I'm sorry.
You can message it though if you want to text it,
Yeah.
or type it in the chat. We'll address it.
Okay, let me go ahead while we do that. Let me go ahead and pull up the S&P 500. And actually, let me pull up the SPY because we can look at the technicals. SPY. Oops.
Roy, I noticed the RSP has been
Yep.
outperforming
Yep.
the SPY lately, which is
Great point. Let me pull that up. I'll pull that up right after I pull up the S&P. Thank you so much. That's I meant to make a point or two on that. Okay, so here we're looking at the S&P 500. The S&P 500 has been stronger when you look at our slide deck, and you can see the number of stocks making 52-week lows, the new lows. It has been significantly stronger than the broader measure in the NASDAQ and in the Russell 2000. But nevertheless, we are in a short-term and intermediate-term downtrend right now, and your downside might be this 200-day. And, so you might have another 4 or 5% move down from here in the indexes. You can see, remember, the NASDAQ made it all the way down to the 200-day in that correction there in August. And so it would be not unreasonable to think that the rates are peaking right in this area. And even as Wesley mentioned earlier, even if we have a hot number, an unfriendly number tomorrow, there's a chance that you could gap down and then reverse, or you can gap down and have further weakness. There's just no way of knowing. The only thing that you can do is follow your individual stocks. If they go through support areas, you'll have to know where those support areas are ahead of time, where you can cut the stock. You can always buy the stock back, and we've actually been doing quite a bit of jockeying for position, here in January after exiting the market in mid-December. We missed the 700-point move down in the NASDAQ as we took everything off the table when this MACD was providing a sell signal. Right here, you can see before the drop. And that's one of the things that we were looking at as we saw many stocks extended from the 50-day on the NASDAQ. And we saw many of our stocks like Palantir and NVIDIA, Axon, Short Ninja, all these stocks were peaking at the same time. And so we made a structural decision to lock in our gains because we thought there was a lot of enthusiasm after the election and so forth. And we took that as an opportunity to sell right into it. So that was a strategic move from our perspective based on the information and data that we were looking at. So you can see the sell signal right here where the green line crossed the index line, which was clearly telling you that momentum is waning. And then you had the huge drop there subsequently a few days later. And that's an excellent way to use technical analysis when you have tools like this. And occasionally, we're always tracking the price phase, the SKSD indicators, stochastics, and so forth to provide more input in terms of timing, timing decisions. So there's the S&P. This is an iteration of George Lane's stochastics indicator, and this includes the fast and small indicator in the part of stochastics. You can notice here that we've been on a sell signal, and you can see clearly we're down here trying to bottom here. So if we get this type of setup and turn up, in the next couple of days, that's going to provide an opportunity to add exposure and increase your exposure. But until you bottom and turn up, we're sort of in no man's land. So that's where the S&P is trading right now. The S&P is off 4.21% this year. The Qs are off 6.22%. That's the drawdown there. And the RSP, importantly, and that was from Brad, right?
Yes.
Importantly, the RSP, which reflects the average stock that's not it's not price weighted. Let me see, RSP. It's equal weighted, and you can see, just like the IWM, it bottomed yesterday, and see where you're getting this signal in the market. So the RSP happens to be down 8.5%. So that's the average stock since, in December going through January, the average stock has been really getting hammered. And if the index is down 8.5%, the average stock is going to be down 10 or 15%, generally speaking. So this is a very provocative. This is very, very provocative, Brad. What you're what you've mentioned, because we might be having this rotation out of big cap tech that is showing, signs of sluggishness, and you're seeing maybe we're going to see some breadth expand, in the next few days, which would be quite positive. 2023 was a Magnificent Seven year where nothing worked except the Magnificent Seven, and maybe we have a year, and maybe 2025 becomes a year where small and mid cap stocks work, and the broad market works while Google and Microsoft and Amazon and Netflix are a little bit sloppy, and you get a little rotation out of that. And I think as well, bank stocks are going to be important as well to suggest that this can continue, that this RSP can continue from here. So you're clearly in this downtrend, but you're clearly having bottoming action. So, if we had a very unfriendly report tomorrow, definitely watch this. But, it could be an ugly day, and you could recheck the 200-day. But it's hard for me to believe anything can happen. But it's hard to believe that the RSP is not going to find support here at the 200-day moving average, because things just aren't that bad in the economy. Yes, go ahead.
So I have a question. Would the industrials and materials be in that RSP, be represented in that? Because there was looked like some rotation going into XLI and
Yeah. Talk about a dead cat bounce. Yeah. This is a dead cat bounce where you clearly blew through. This is the XHB materials, by the way, guys. And this is very, very negative in terms of negative action. And so we're can slim type investors. Our process has been, we've made all our money buying stocks that have superior earnings growth, earnings acceleration, superior revenue growth, that are trading near 52-week highs or at all-time highs. So the material stocks, like copper and things like that, copper and other stocks in that group, they would not be on our buy list right now. So it does look that you're getting a little rotation here, but maybe we do have this period where the big cap tech cools off, and you have these. Even if you get a bounce here, if you have these move higher, that would be supportive to the overall market in terms of breadth and increase. The breadth statistics would be viewed positively. So the XHB, the XLI, that's the industrials. You didn't quite, this is a pretty massive sell-off. It's come all the way back down to the 200-day. Notice you got the buy signal, see right down here. So if you're a bottom fish type, value type of investor, this would be ideal. This is what you would want to be looking for. And we aren't, but that's just because that's our style, and we don't necessarily want to style drift. But if you're a value investor, and certainly there's nothing wrong with that. You can trade anything. Our view is you can trade anything based on your, based on your psychology, your mindset, and there's many more ways of doing this than just ours. But this is something that we've just focused on for the last 38 years for me, and so this is just we have an affinity for growth names. But that's what's going on in the XLI. Now, when if you're worried about a recession, XLP, and this is why it's very difficult, because normally in a recession, the XLP, and these are the consumer stocks like Procter & Gamble and Coca-Cola and Johnson & Johnson and all those names that that provide products that we use and we have to use and we use every day. And those you would know if there's an inflation scare and a recession scare, you would not see this XLP down like this. In a recession scare, the XLP should be making new highs, not new lows. So this is telling you that the S&P is much stronger than the XLY and the XLP, and that means, and what that means to us is that the economy is still expanding. Remember, a recession, by definition, constitutes two consecutive negative GDP quarters, and along with other variables that you can read about. But this doesn't suggest that we're anywhere close to having two consecutive negative quarters. And if that happens, it's going to happen very fast, and it's going to happen after the fact. You'll see it after the fact. And we're not seeing that slowdown in GDP that would constitute a warning that a recession is impending. Yeah, go ahead.
Question about the XLP. Would the strong US dollar have an effect on the XLP stocks? Because like a lot of them are international corporations. I'm just wondering if that.
And so Ern, what a great question. So
Yeah.
let's just unpack that just a moment. So Wes showed you a chart of the US dollar earlier. And the US dollar has been very, very strong. Now, that is a headwind for these companies that are doing business overseas. And probably, maybe, these multinational companies, our biggest companies, they get up to 40% or more, 40% or higher of their business internationally, overseas. It's truly a world market in terms of us providing goods and services across the world. When what might be happening right now is, as the dollar has risen, and we've seen what the dollar has risen. Let me see if it's UUP. Yeah, this is up. Nah, that's not, that needs to be adjusted. While the dollar has risen, that's going to provide a headwind in currency translation. And we've had about a 7% rise in the dollar in the last 90 days. So that's going to impact companies when they report. But on the other hand, many times currency translation is viewed as a one-time incident. So there's going to be an impact on earnings per share as companies start to release their numbers, but it will probably subside fairly quickly.
Okay, thanks.
Okay, so that's sort of an overview. That's an overview of kind of the dynamics of what's taking place, in the market environment right now. If you have kept your drawdown, we've seen the drawdowns there in the FFTY, which is all this is just anecdotal information. But if you've kept your drawdown and under what the S&P has done so far this year, you've done a great job. So don't mess it up. Don't get too aggressive too quickly. But it's okay where we are right now. The information that's going to be provided to us tomorrow with CPI is going to be very important. However, we do have on Friday the PCE component. So the PCE report is what the Fed that's their real measure of inflation. So that's going to be an important report. What's important is how this market ends the week. So in just about every case, when when you're in an uptrending bull market, you only have many times only a couple of weeks where the market comes in and then finds support. And that 10-week is going to be important. Let's pull up the 10-week on the NASDAQ so we can take a look at that. I want you to, take a look at that. We're below the 50-day. Now here's the 10-week. We're below the 10-week, and the blue line is the 21-week. And notice when we broke the 21-week before, it was followed. This is the big purge there in August, where you gap down and then close, at the high, which was very supportive behavior right there. And then you're off to the races. So you notice here where you were below the 21-week, 1 week. And so, so how we close this week and then this week, next week is going to be very, very important. So it's tricky. It's tricky right here. We don't want to go through like we did back here in 2023, where you had somewhat of a lengthy intermediate term correction, and it's anything can happen, guys. But as I've voiced more than once tonight, anything can happen, but you have to just manage risk here. No one can predict anything. You just have to adjust to what the market is telling you based on the feedback that you're being provided. But this is what the indexes look like. And with that, let's move over to now individual stocks, because you'll hear people like David Ryan and Mark Minervini, who are certainly world-class traders. They will, they'll bully you enough if you listen to them about not paying attention to the averages. And their advice is just take the averages off your screen. But in fact, it's not that easy. And Wes and I, in fact, many times we use the indexes if we don't know who the leading stocks are, but the market, particularly coming out of a correction and moves higher, one of the first things that we'll do is buy the indexes. We'll buy the SPY and buy the QQQ and derivatives of that. Many like the FNGU or the TQQQ or the SPXL, the leveraged versions of those to get immediate exposure when you don't know who the leaders are. Now, we have more of a sense in the last 10 days of who those leaders might be than we had before when we initially started nibbling and buying some things back there a few weeks ago. So it's highly unlikely that we'll buy many of the indexes when we know what stocks we want to buy on the pullback, if the indexes provide that avenue. The O'Neill spoke eloquently and succinctly and clearly about it in his book, How to Make Money in Stocks. It is just very, very difficult picking that needle in a haystack when the indexes are going against you. When the institutional pressure is on the market, it's very difficult to make progress in the greatest stock on the face of the earth. It's just very, very difficult. Many times those are the ones that are just holding up near their all-time highs or 52-week highs. And once the pressure comes off, then they're first out of the gate, and those are the ones that become the big winners, typically. And in our view right now, those are the power companies, and we'll take a look at those in a moment. So let's take a look at Market Surge rather. And we wanted to give you a couple of instructional pieces so that you could put some of these tools in your tool in your tool kit as well. We basically have this is a list that we sort of put together. We look at it every week or two, and it's sort of our focus list. If stocks get our attention, we'll just put them in this list. And these are all screens that we run. We run, 100. We've got 100 screens that we run, looking as we try to identify the leading stocks in the marketplace as established by criteria that we're looking for. So this is just in alphabetical order, and I just wanted you to take a look at this where you could do a print screen if you would, like. And this isn't really that current, but this is the list that we're looking at right now. And let me just go through a couple of pages here, Caterpillar, and go down to the bottom. You can screen that, and by the way, you'll be able to pull this up on the recording. So you'll be able to pull all this up if you're not doing a screenshot. And so these are stocks that, for whatever reason, they hit our screening criteria. Finally here. Now, more importantly, let me show you our buy list. So this is what we're working at. This is current through today for us. Now we update this list, and this is the most important list because this is what, for us, this is what we're buying off of. Like, we believe that all of these stocks are fundamentally and technically sound. And then we're just looking, if we don't own them, which we own 12 of these, then if we don't own them, then these are the ones that we're looking at for tomorrow. And we're actually computing the buy points, sell points on many of the stocks that are on this list. So let me go through this with you in terms of the screenshot. You can see it's down to 46 names, and of course you certainly have many names that might not be on this list and we're looking forward to that input from some of you guys tonight as we discuss some of these individual stocks. But this is the list that we're using to buy on tomorrow if we want to add exposure. And so it's a very short list. So there they are, there they are. So many of you are aware of this is no surprise at all to many of you, but this is a fresh list for us. Now, as earnings come in, this list is going to be repopulated because what we're waiting for are new, fresh earnings reports. Stocks that break out to new highs, that have astounding and very, very strong volume and strong price action. That's what we're really looking at from a momentum standpoint. And earnings periods, we really like to focus on stocks that are up 10% or more in price that day, and that also has volume that's trading at 300% higher than normal. And many of the stocks that exhibit that criteria and that signature technical volume characteristic go higher until the next earnings report. So these are, when you get stocks that move higher that are under accumulation, they typically have earnings drift. And earnings drift, what we have called earnings drift, where the stock systematically just inches forward because there's just buying pressure there. Because when institutions are looking to acquire a position and they're looking to buy 1 million shares or so, that supports the stock. And additionally, you also want to find stocks that go up for multiple weeks. When you see a stock that's coming that's coming out of a correction that can put together like 5 consecutive weeks up. Those are typically very, very powerful stocks, and those are stocks that you want to pay attention to as well. And finally, on this list, this is what we own, and we happily share this with you as well. We think Bitcoin is our favorite idea in 2025 that we have the most conviction with. And let me just go through a couple of these and maybe share with you some technical aspects of what would you buy? How would you buy these? How would you have entered? How would you exit? And how would you handle the position? So let me go ahead. Let me see. I'll put this in alphabetical order. Now, again, we own all these, and I think we pressed GEV today to have a 5% position. We've got a 5% position in Robinhood. We've got a 5% position, or 5 or more in IBD, maybe 5 to 7. We initiated Palantir today with the 2% position. We also bought a 2% position in Tesla. And Reddit has great fundamentals as well, one of our top picks. And then you got VRT, of course, in the data center area, and then VST and so forth. So this is the leading stock in the leading group in the market right now. So GE Verona, and it's in the energy alternative area, which that group is ranked. You can see number 6. And notice this is it's a spinoff from GE, and this is in the alternative energy area. So it's got a terrific price. And see, this is an institutional stock. It's not a stock that's trading at $2 a share or $3 a share or something like that. It's trading at $382. Now, based on the earnings growth, this is just a powerful situation. So the market's been in a correction, and we actually traded this stock earlier during this period. Earlier, a year ago. And in fact, though, I think, if I'm not mistaken, I think that, Wes, did we sell this like right there on that key reversal?
So we sold it. I think it was like 5 days before that first red day. We did buy it back, however.
Yeah.
You can see that a little tight consolidation in like early October. We bought it back, so we sold it early and then bought it back right there. Yeah,
Yeah.
yeah. For the next move, yeah.
Yeah, and of course we sold this. We sold this going into December. So we sold it somewhere up here with a very meaningful gain. Notice that the stock was making. We bought the stock right here, I think, on the breakout at 203. We bought the stock, I believe it was at 203, if I'm not mistaken, right there. We de-risked there. It went higher. It went sideways. Then we bought it back and sold it again up here. So this stock is why does this stock get your attention? Well, the stock's making a 52-week high. It's all-time highs. And look at the earnings numbers. 2024 earnings, and earnings are going to be reported in 8 days. But look at this number. The projections are going to be increased 174%. Remember, O'Neill found that the greatest true market leaders, model stocks, needed to have at least a 25% earnings growth. Well, heck, this stock's got 256% annually in 2024 projected, and 2025 174 going to $7. And this is going to be more than likely, it's going to be light. So this is yeah. Go ahead.
Yeah, I was going to point out, the fundamentals about it. That, like you mentioned, the numbers are great, and I was going to talk about what's behind it, and they build the turbines that run inside those nuclear reactors and all that, and they're booked up through maybe the next 2 years, and all the commentary that people care about is, okay, are you booked out through 2027, and is pricing better than 2026? And so that's kind of what they're dealing with. They're like the only people that are building those turbines, and there's a limited amount of slots, and Google and Amazon and Apple and Microsoft, they're all competing for those slots. And they called it the new, uh, what do you call it, archetype of customer and everything. So that is what's happening. It's all these people that are locking in, their orders way down the line, because everyone knows that the AI data center thing is a real phenomenon, and so they're paying up to be one of the 80 slots that they have. They can basically build 80 a year, and that's what's going on. It's certainly, all these people can pay up way more than your traditional utility, and so that's just what I know. That's what you need to continue to look for, anyways, going forward. Is make sure, okay, is pricing still getting better and better in the out years that they're going to talk about? So that's my 2 cents, again, 2 cents on that stock, because it's helpful to understand exactly what's going on. And they do have some wind exposure, but I think they're shutting it down because it's been a chaotic loss generator for them. Anyways.
And and you might hear, again, Wes mentioned about the big companies that of course, the issue is power. As you know, it has been anticipated, projected that that the data centers that are going to be running these large language models are going to consume 70% of all electricity in our country in the next 5 years. So we need alternatives. Nuclear might be one of those alternatives, and GEV has partnered with BWXT. That's a company that's in the nuclear area, BWXT, and they're doing all their nuclear business with a GEV. So let me just show you one screen here so you can look at this product market surge. We highly recommend you to use this IBD product. Most investment managers that we know and traders that we know all subscribe to this platform. And by no means is it the only thing out there. In fact, TraderLine and those guys have deep view. Minervini's he's got a new platform coming out that he's going to bring out actually this weekend that's got an AI component in the platform, and I'm very interested to see how that works. So here are the numbers. Let me see, weekly on GEV, and you can see the earnings growth next year. Look at these earnings figures, guys. 300% in the March quarter, 1,900% in the June quarter, 1,100% in the September quarter. This is why this stock is powering ahead. Remember when I told you stocks that move up consecutive weeks, like 1, 2, 3, 4, 5, 6, 7, 8, that moved up 9 straight weeks. That's showing tremendous strength, and those are some of the things that you should be looking at. So the next stock that we'll talk about is, and we won't spend as much time on these so we can get to yours, the stocks you're interested in. Robinhood. So this is you're all aware of Robinhood. They're going to be a beneficiary for people that when all the millennials hand down their wealth, most of these guys trade at Robinhood. Many of the younger investors they trade here. So you can clearly see the stock moving to an all-time high territory today, and then pulled back with the market. So it's got somewhat of a indistinguishable base right here. But if this stock takes the high out, say we get a very favorable number, this is another stock that's just coming out into new high territory. And that's where you're going to find your leaders. They're going to be making new highs. Of course, any of these stocks, you can trade anything for 5, 10, 15%, whatever your style is. But, we're trying to get stocks that we can buy, like here at 40, that goes to 80 in 2025. You can see the revenue growth is very robust. The last 4 quarters up 100%, 132, 600%, 289. And of course, they're introducing many new products that in crypto and other areas that Wall Street retail brokers aren't providing to their clients currently. So Robinhood, great numbers, up 250% this year, 26% next year. And let's look at and see what that looks like on the weekly. And you can see this very, very tight, nice base here. You do have some overhead over here on the left side, but this is going back a couple of years. This line right here, this is where the true resistance is. This shows you 18 months from currently going back 18 months, and that's showing you that's the resistance. Anything that happens typically before that there is tempered, so to speak. If you had all this overhead in a congested, compressed period, then that would be a headwind. But here it's been over a year and a half, 2 years, so it is. We view it as, you can clearly see it's in a new stage 2 uptrend. So we would like this stock to continue to work, and the real money is going to be made going into all-time high territory, not just getting there. The big money is going to be going from 80 to 160 in the next couple of years, as long as this earnings profile continues to move higher on the charts.
Roy,
The next, yeah, go ahead.
I have a quick question.
Yeah.
If you look on Market Smith there, or Market Surge, no, back to the weekly, sorry. It's the
Yeah.
weekly. So do you ever look at the forward PE ratio?
No.
And now, if you look at Robinhood there, it says 36.
Yeah.
And then you look below the 5-year PE range,
Yeah.
it's actually
Yeah.
cheaper. The forward PE is cheaper than it's been in 5 years.
Yeah, we're from O'Neill's standpoint,
No,
PEs.
PE is not a big thing. I realize that, but
Yeah, PEs. So I definitely, if you're a value investor, that might make you get excited, right, Brad? Are you a value investor? You grow?
no, I'm more of a growth investor
Yeah.
myself. But so when I see that, it just helps reinforce my conviction.
It
Sometimes.
does. It does. You have to be careful.
Okay.
You've got to be careful. And, Minervini has described it before. When stocks that have no PEs finally get PEs, and then they're cheap, you have a PEG ratio where it's trading under its growth rate, that many times the sizzle out of the stock has gone. It's been alleviated. And, that's why we're looking for stocks that really have high PEs, where you can't predict how large the moat is, or how large the total addressable market is. And many times those stocks have sky high PEs that never come in, while they continue to move higher and perform as model stocks, certainly do. So, you have this stock, when you look at it, you've got a 1, 2, 3, 4, 5, 6, 7 week base now. So while the market has been digesting, if you will, this stock has quietly put in a 5-week base that's set up to perhaps to make the next leg
perfect RS line too.
higher right there going through here. So that's why we're in it. And we actually added to this position today. And we again, everything that we bought, it's been in the last 2 weeks. And we're navigating and jockeying for position. But we have a relatively small position still. But and the stocks that I'm showing you right here, along we'll look at others that you guys want to look at. But we think that if the market gives you an opportunity and we have a hot number and these come in, these are the names that we're going to favor on a pullback, in the next couple of days. Bitcoin is that's our most convicted idea for us. And this is just picture perfect. And we traded this stock. This was a big winner for us in 2024. We traded it from there to there, and then we traded it from there to there. And again, this is one that we held. It's one of the only stocks we held into December, and we sold down. We had a 15% position, maybe 20 right there at the top. We sold down to 5. So we de-risked, kept 5%, and we've held that 5%. But notice this breakout. Notice the base. That's the IPO base, the advanced phase consolidation, and then the perfect breakout from there to there. And this is our favorite idea. And so how do you play something like this? So we added to it today, taking out that pivot, and it's back above the 21-day and the 10-day. So we added a little bit more to it. And we also, oh, by the way, yeah, let me back up. Let me show you what we did where we lost money, where we added to it, then lost money. So we had 5%, and you can see it came down, and then you had this move up here. So we actually had a buy stop right there. So we had a buy stop taking that pivot out right there. Do you guys see that? So we view that as an important area right there. So we had a buy stop, and that's when it took off. And then we sold it. Then we had the expectation breaker the next day in the market, and we sold the piece and took a loss on the piece that we just bought. And so we took so we were back down to 5%. We came back in. You found support at the 50-day, and now we took out. We're trying to put in this bottom, and so we added to it here. So we added to it today. We're going to add it to it there where we have that alert. We're going to add to it right there. So we added to it today. We're going to add to it, taking that level out again. We're going to add to it, taking that level out again. And then we're going to add to it if, presumably taking out that level.
Hey, Roy, just
yeah.
wondering, are you ever worried about, Bitcoin tanking 10, 15, 20% over, overnight or during a weekend like it has done in the past?
How about here? Yeah. This is that August bloodbath. Now it passed quickly, but look, it was down.
Did you sell August the 5th or whatever it was?
Wes, do you remember what we did right back here? Oh, we sold it. We actually had sold some ahead of.
I think we sold it Friday. Honestly, I did. I think that was a Monday, that bloodbath day.
Yeah, here.
Yeah, I think we sold it Friday.
Right there.
Yeah.
Yeah, I do recall, and I actually owned BITX, which is the leverage Bitcoin. It's 2 times, and I had a slug of it, but it didn't have great action right here. So And so I got fortunate where I was, looking at the market action, say, man, this isn't normal the way it's acting. You have an outside day to the downside. So I know I sold mine, and I'm sure we de-risked for clients as well. But yeah, that's the rub here. It's got your best, I believe, fundamental story, and the technical picture is only getting better. And so this is how we're going to handle it. We're going to average. Our intention is to average up, to buy higher, buy higher, buy higher, because it just broke out. When you look at here, and when you look at these stocks, that you have these green. Eric Wish has coined that phrase, green line breakout. When it goes to all-time high territory, right there, many times this should be 80. So it broke out at 40. So, we think it's going to go. We think Bitcoin, it's like 95, 96,000 maybe right now. We think it's going to go to 200. We think it's going to go to 200 to 250,000 in 2025. And the stock is showing you its strength, its power ahead. And, the only way that you can get stocks that go up, that can double and triple normally, is if they get into new high territory with no overhead. So this is our best idea, our favorite idea. But what would spoil it for us? We would, if it comes out and takes out yesterday's low, we would be selling. We would be selling what we bought today. We would do that. So, we prefer to move incrementally, and because we just started the year out in 2025 after a great 2024, but that's yesterday's news. So until we get profits built up, until you get profits built up, you should be err on the side of caution, probably. Then go full bore. Even if the number tomorrow is friendly, you've got to use some kind of judgment in terms of, well, how much exposure do you want to add in one single day? And for us, it's normally about 30%. And I think we added 15% today. And by the way, what we did today is the positions that we had 12 positions, and we added like 1% on just about all the positions. So we just added one more. We went from 2% to 3%. That's what we did. And then we added a couple of small positions in, again, Palantir and Tesla. So here's Meta. So Meta was certainly the leading. It has been one of the leading big cap Magnificent Seven stocks. Now, there's a little bit of anxiety, and the stock sold off 2% today because of the TikTok news. And TikTok, the Supreme Court is reviewing that whether or not they're going to force TikTok to sell their North American operation to someone else because it's owned by China. And believe me, China is taking, and they're mining all this data from the billions of subscribers that they have. So they are mining that. It's certainly a risk to our nation. So that's what's going on there. But the stock is really holding up remarkably well. And they have, Meta has such an avenue, so many different varied businesses like WhatsApp, Instagram, along with Facebook, that it's just a very, very powerful organization with tremendous reach. And as you know, Zuckerberg is made up, and he's moved right from left, and he's made up with Trump, and he's kissed the ring and all that. And Dana White has been invited to be on his board, who's best friends with Trump and so forth. So, so that's what's going on with it. If it shakes it off and goes to new high territory, it started to go 2 days ago. and then the market pulled it in. So it's going to be interesting to see, what happens there. Now, Palantir was one of your big guys that are on this call. Many of you own Palantir as we did in 2024. This is one of our biggest winners. And you can see it had that classic breakout, and we bought it right there, and we sold it on that key reversal right there. On that move up, you had this 80% move right there in it, and then we bought it back today.
What was the trading setup today for buying it back?
What was what?
Which trading setup did you choose, or the reason why did you buy it back today?
Well, first of all, the stocks dropped from 84 to 80. Now, many of these, you hear this, but let me just echo what many people have espoused before. When IBDs, they've done countless studies on these model book stocks. Now, in fact, Trader Line, they've been doing it too the last few years. And they've got one that they're I just got a call from them, and they're sending me an autographed edition, and that they're doing with Stan Weinstein. And what's my point? Model stocks, they typically come into the 50-day, every 3 or 4 months. Many stocks they can hit the 50-day over the course of a couple of years. And the way that we look at model book stocks is stocks that they can have like 4 to 6 to 8 4 to 6 to 8 beat and raise quarters. So if earnings are released 13 weeks and you have 8 quarters, that's 104 weeks. So many of the leading model book stocks that you go back and say, man, that had all the ingredients, and that's why it moved. Like AppLovin, for example, it had those. Many of those had that characteristic. So the reason we bought it is we think this is the pure AI play in the market today. And the stock has come in. We sold it right. We missed the whole decline. And so we saw it hit the 50-day yesterday, the last 2 days, went under it today. And then out of the gate today, it's started to move up. So we think they've got great fundamentals, composite rating of 99, which is the strongest rating that you can have. So the fundamentals are top notch. This was the biggest winner in 2024, or number 2 between it and VST. So we bought it back. We're guessing here. It's sort of, we think it's washed out. Let's take a look at the technicals. So what do the technicals look like? There's the weekly. And again, there's the 10-week guys, the green line. So many of the leading stocks come in no more than the second week below the 10-week and recapture the 10-week. So if this stock comes in and takes out the high and captures the 10-week, that would reinforce our view that that the uptrend could resume again. But that's a pretty massive pull in. But it needs to find support right there at the 10-week. And when you look at it on the MACD, you can see it's way over sold. And so we're looking at things like this, like why did we buy? This is one component of the MACD. It's called the price phase. And what we're looking for when this price phase will turn up, that's going to confirm that the trend is now turning back up from a price perspective. So we're looking at the MACD, and you can see you're way oversold, and we're looking for just a turn. And so that's why we bought it. We are using yesterday's low for a stop. And so that's a really tight stop.
Are
And
you not
yeah.
worried about recent overhead and also the distribution days?
I mean, the distribution days in Palantir are in the market. The stock itself, or are you referring to the distribution days in the overall market?
I'm referring to Palantir. I think they had 1 or 2 days of higher volume on the downside,
Yeah.
number one.
Oh yeah.
And
Yeah.
number
Yeah.
two, you have
Yeah.
quite a bit of overhead resistance, right? I mean, look at the last
Yeah.
2 weeks. It
Yeah.
dropped from
And,
84 to
yeah.
65.
Yeah, and that's why we only dipped our toe in, because it certainly could fail. So we're taking a very limited position, wanting to get bigger, because again, this is something that we had a 10 or 15% position before, and that moved the needle. So we have roughly a 2% position here. So we haven't even begun to buy it, but we would buy it if it follows through tomorrow. It needs to get above the 10-day and the 21-day. So that is really what we're looking for. In the next couple of days, it's got to get over it's got to close over the 50 for one thing. One thing at a time. So it was above the 50 when we bought it today, when the market was strong out of the gate, and we bought it going above the 50. And so it needs to close above the 50. Then it needs to close above the 10-day and the 21-day. Those are these two lines. And then we need these technicals to turn up. It's not something that necessarily is going to happen like in one day, but we're just, yes, there is overhead. And yes, the stock's down, 20%. But that's where our studies have shown in the past that's where the leading stocks should pull back roughly, 20%, 17 to 20% or so. And you want stocks to also not be too extended below the 10-week. And you can see that we're slightly below the 10-week here. So price action will take care of many things, but we don't think it's over. But but we have to look at the quarter. The quarter will dictate. They're going to have great guidance and great guidance, and they're going to have to beat and raise the quarter. And you do have a terrific CEO at that firm. So that's why we have it. That's how we're handling it. One bar stop. So that's the amount of risk that we're taking, which is probably only 2%. And 2% risk on our 2% position. Our loss will be less than 0.1%. And which reminds me, people ask us all the time regarding stops, and how do you put your stops in? And O'Neill has famously said that CanSlim is perfect for taking 20% gains and 8% losses. And if you get 3 winners and 1 loser, that's a great batting average. But in volatile markets, it's impossible to have batting average that's where you're up 75% of the time. That only works in periodic phases when you're in a very strong power trend bull market environment, which comes around normally just a few times, a couple of 2 to 3 months a year, or 2 to 3 months a couple of times a year. You have 2 or 3 times, many times, when the market will provide you the returns that are going to make your year. It only happens. It doesn't happen 11 out of 12 months. It typically happens a few months, maybe half the time. And so you have to, quote, make hay while you can when you take advantage of that. But, okay, My point being, when you're looking at stops, guys, what we do is, and this is in many seasoned traders, you'll hear this. You'll hear them say, well, I don't want to lose, and this is our philosophy, and this is for what Wes and this is how we operate. We don't want to take more than a 1% drawdown in our equity capital on one particular stock, on one particular trade. So, if you've got $1 million account, that means that we don't want to lose more than $10,000 on that trade. To make it simple, if you got a $250,000 account, we don't want to lose more than $2,500 on that trade. So, and so you position size that. So, in this particular case, if you had $2,500, dollars, to lose, or if you had in a $250,000 position and you had a 10% position, you don't want to lose more than $2,500. And with a 2% position, this is going to turn into we might lose $500 in a $250,000 trade on that one trade. So if you have a 10% position and you lose 10%, that's that 1% that we never want to go over that 1%. Now that can happen, like the gentleman that mentioned before. Aren't you worried about Bitcoin? And if you have a 10% position and then you lost 20% overnight, well, then you didn't violate a rule that happened overnight. There's nothing that you could do about it. And those things do happen. Those black swan events do happen. But, in normal cases, a 10% position, if you limit that to 1% in equity, you can recover from that. We were lucky in 2024. I don't think we had a position, and we did hundreds and hundreds of trades. I don't think we had a position where we lost more than 1% of our capital on that stock. I think our worst performer happened to be CRDO a year ago when they came out and the stock dropped 50%. And we probably had a 5% position in that. And that was just out of the blue. But I don't think we had anything that we lost more than 1% in. We had 4 or 5, but we kept the drawdown low, which is what you want to accomplish, because this process of CanSlim, and many of you that have followed O'Neill, O'Neill disciples, people like myself, for you to get those outstanding results, you're going to have to concentrate. And so there's that fine line between, well, how much do I put into a position and versus taking the risk by concentration. And O'Neill many times just he had, and the guy is just he was an incredible legend in in the trading community. And I have known many times where he's had $100 million in one position, and and he's hit it. And that is, most of people out there that are, in the market, they can't sleep at night with, if you had all your money in one stock, no matter how good that stock performed. So that's something that you'll always have to contend with, but there's that, you always have that question regarding position size as well. So just keep that, in mind. So the next is Roblox.
Roy, real quick.
Hey, just one question.
It's okay.
Yeah.
To ask something real quick. Okay. So you guys have 1% AUM on one single position. Do you have like a maximum drawdown before the stops get hit? Like 8% on the entire portfolio if you guys had 8 positions or something, or 10% if you had 10 positions?
It is really we do have some latitude. We've been taking stuff out, like, that recently, that that we bought, that we like all of we when the market turned a few weeks ago, and we took some sizable positions that we were right in the indexes, and we had the leverage indexes, and we sold those at break even to a slight profit when the market turned, like that next day. And we didn't let stuff go down, 3, 5, 7%. We sold them at break even or slightly profitable when we saw the market turn. So that's just an individual decision. But again, we always operate around that. We don't want to lose more than 1% of capital. And because it's been so volatile and there's been so much volatility lately, we've been exiting like 3, 5, 7. Generally speaking, probably our average loss this year is probably maybe for all trades, maybe 3%, 2%, something like that. And yet, and we haven't had much of a drawdown because our position sizing has been so small when you put that together. But again, 2 weeks ago, we didn't know who the leaders are. Now we have a better sense of who the leaders are now. So we're sharing with you, like, our names right here that we think that we're planning on adding to them if they turn up tomorrow. And then, if they violate support, we may have to trim some. We're just going to react to what the market provides.
So, right.
Yeah.
Just one question.
Yeah.
So for example, in the Palantir example, you set the stop to yesterday's close, right? So, assuming that basically the market goes up and down, like tomorrow is the CPI, right? So you will hit that stop, right? So that's, I don't know how much percentage that is on that stock, right? But question is, how often does this happen? Every time you put in a stop loss, if it happens like 5 times, 7 times, 10 times before actually the stock moves up, right?
Yeah.
So it's compounding the potential loss because of the stop loss, right?
Yeah, but keep your losses manageable, Kieran. And it's just because we take a loss doesn't mean that it's not going to work. So you don't constantly beat your head, and you don't revenge trade. It's just, okay, it's either the stock's not right or the market's not right. So if the stock, like right here, just if it takes out yesterday's low, well, we're going to just sell it, and we'll try it again if it sets up based on the way this IBD, we kind of guide you through how we're going to play that IBD. So here, we're not looking at just making a gain from here to the 50-day. We want to, if this stock, we've had a correction here, quite significant. Let me see how much this is down. See, this is down 22%. It's right at the length of the extent where most leading stocks find support, right around that 20% area.
Understood.
So, we'll try it again. We'll try it again and again and again. Now, we don't recommend you just focus on that one stock and completely, blow yourself up by, constantly going and it not working. But, you're going to get stopped out. And the main thing is to keep your losses small so that you can fight to play another day, so to speak, and adjust appropriately.
Sorry. The reason why I asked that is, like, whenever you're entering the trade, right? Like, typically the stocks can move up or down a certain percentage, and eventually they might move up, right? So what my concern is, or my question is, it's like when you enter, you have to be very, very accurate in the sense that you don't expect it to drop below yesterday's low, right?
Yeah.
And in reality, that might not be the case because stocks move up and down. And once it goes above that, we are fine, right? But what I'm worried about is like you enter and yeah, today it goes below yesterday's low, so we get stopped out. Tomorrow
Yeah.
it zooms up, right? So
Yeah.
how often does
There's
that happen, right? So how often
happens
does
all it happens all the time.
okay,
Happens all
okay,
the time.
yeah,
I have a few questions regarding the Bitcoins.
Yeah.
As you mentioned earlier in your presentation, there might be a risk of tech or large cap tech or growth
Yeah.
underperforming this year. So
Yeah.
how you will trade Bitcoin, because historically in the past, Bitcoin and the high growth stock move together.
We think it's got the largest total addressable market in the world. So so this is much bigger. It's got you got about $3 trillion in Bitcoin, and I think you probably have 100 trillion in gold, maybe. Uh, is it that? Is it that big? I'm not exactly sure, but yeah. We have studied this extensively.
11 trillion in gold, roughly, and 2
how
trillion in
much?
Bitcoin.
How much?
About 11 trillion in gold, and
Okay.
Bitcoin about 2.
Wow.
yeah.
So they're catching gold quickly. Okay. So they're catching gold quickly. So this is the biggest total addressable market. Importantly, this is the most revolutionary, most upside potential uh, capital asset allocation situation that I've ever experienced in 37 years. So now it may not work, it may not work, but it's working now. You can see we kind of guided you through that. And we think it's going to work despite what happens with Netflix and Amazon and Google and Microsoft and Tesla. It's going to march to its own drummer, we believe, and it's one of the big reasons, of course, and I'm sure many of you are aware of the fundamentals surrounding Bitcoin. There's a limited amount of supply, 21 million of Bitcoin that will ever be mined. So it's the best supply demand situation that we've ever seen. That's going to be desired by people, by billions of people all across the world. So it's nascent. We're very, very early in this, but this is the instant. All the money that was made before, that was in that nascent phase. Now this is the build out phase. This is the institutional phase. Remember, the ETFs are only 1 year old. So remember a year ago that by the way, the SEC chairman was on CNBC today talking about some of the things that he's done or did not do. But he was a very poor advocate of Bitcoin. And in the administration right now, from everyone that's in the cabinet, everyone owns Bitcoin. And so that is very, very positive. This is the biggest and the most business friendly administration and cabinet that I've ever experienced, since I've been voting, and, for 50 years. So, yeah, so it's,
Do you know?
we're not worried about the rotation there. If it doesn't work, we'll be out of it. So they're not just, I mean, any of the, it's interesting. None of these situations may ultimately work, but, it's important to navigate through and understand the supply demand relationships in the market and be able to navigate through it and know these things, have these moving averages as guideposts to help you and equip you to manage risk. But there's no black or white decision that you can make. This isn't like calculus where you can solve for a problem and get an answer. This is the most complex organism in the world, which is called the stock market. And you just have to understand how the markets work. You have to be able to interpret the volume, interpret the index action, and that really comes with study and experience. But believe me, everyone can get better at doing it, but you just need to continue to know what to look for and know what questions to ask and know how to interpret those factors that we've been talking about, such as MACD and stochastics and all that stuff.
How do you gauge the institutional fund flow into the Bitcoin? What is a good source?
How do you judge the fund flows?
No. How do you gauge, like, how much is the institutional fund flow into the Bitcoin versus the retail investors?
Well, the buy side guys, they have been investing in Bitcoin, but it's a new phenomenon where BlackRock, they provide those stats. Fidelity provides those stats in terms of fund flows. So there's hedging data that we look at, based on the commodity exchange. There's all kinds of things that we look at to describe what fund flow is. But the amount of Bitcoin that's sold versus that's been bought, that's been mined. If you dig deep, you can get those information. You can get that information. We're just following the wave. We're following the price. So it doesn't matter what anyone's opinion is. What really matters is the price. Price is truth. What is truth? Price is truth. So we're following the price, and we're also studying, volume signatures that you can see here on the chart, and you can see that volume has been trading as we've consolidated. Volume has been trading under the red line, which is under normal volume, which is totally acceptable and fine, and that's what you desire when the stock is going through a consolidation standpoint. So when I clearly see that, it's acting right. It's coming in when it's coming in and correcting in price. Volume's declining, and that's a nice scenario. Now, what you want to see is action like right here, like right here. This is what you want to see, and this is where we bought it, right there when it broke out of this little base there. You had you had 2 days to buy it before the big move higher, where you made 50% in it. So we're looking for what we would like to see is a few days back to back where there's big accumulation, and that's what you should be waiting for. We don't have it yet, but it is consolidating on lower volume. That's why another reason that that we took a small position. We saw the key reversal day yesterday, and it followed through today, and so that's what we're looking at.
Do you invest in actual Bitcoin as well? And do you know which is a good brokerage for the retail investor for the actual Bitcoin, because of the weekend risk or the overnight risk, if you want to?
Yeah. Both Wes and I have bought Bitcoin at Coin. We have accounts at Coinbase and also Robinhood.
Okay.
So we've bought, but it is it's expensive, and like Coinbase charges 2%, 2% for the trade. So you put $100,000 there, you're charged $2,000 in fees. So we would rather buy the ETF where there's no fees, and we don't really care about putting it in a wallet and putting it in a wallet and potentially losing that wallet. And we're not potentially interested in hiding the trading activity gains and having to report the gains to the IRS. We're just like, we look at it just like another stock. if we buy it and sell it, we're going to know the taxes on it, and we're going to pay the taxes and move forward. So it's easier without any slippage just to buy the ETF. Just like gold, it's much easier to buy the ETF that represents and correlates with gold, 99.9%, and you don't have to store it, put it in a safe. You don't have to put it in your house where it can be stolen. It's very easy to use the ETF.
Many of these ETF also use Coinbase as the vehicle to buy underlying Bitcoin. So what is the markup for them at Coinbase?
The numbers on Coinbase are pretty good, but you can look at the numbers here. So Coinbase made a new high, and you can see it's in this downtrend. It's sort of living below the 50. Earnings are in 30 days, but living below the 50-day. So I'm not so, and I've traded this before, the stock, but it's not acting great here. It's not, this is sort of a Bitcoin play and a brokerage play, as well. But those, while they're having, very, very strong numbers now, there's going to be some margin pressure with competition. Believe me, that 2% is going to come down, just like when BlackRock and Fidelity launched their Bitcoin ETFs. What happened then was GBTC, which was the only way that we could play it before, the GBTC Trust, and they were charging like 1.7%, and they've lost half their assets to BlackRock and Fidelity because their fees were so high. So there's going to be potential margin pressure here on Coinbase. But we like Robinhood because you can buy anything there, and you can see the stock making a 52-week high. It's making a 52-week high. This isn't making a 52-week high. So that's, we look at that with decisively as important to find the leader, to find the leader in the whole group.
Hey, Roy, can you give us your thoughts on, we know there's only 21 million Bitcoin, but as the ETFs proliferate and the Bitcoin adjacent products proliferate, the amount of money that's involved could be a heck of a lot more than what is represented by the Bitcoin themselves. How should we view that?
That question's a little bit nebulous. Charlie, it's now MicroStrategy is one of the only firms that was trading at a multiple of their net asset value. Like, it was trading at a multiple of the Bitcoin holdings that they had because of what they're doing. And Michael Saylor is Saylor. Yeah. What he's done is he's launched this I guess strategy in which he's raising money mostly in the debt market and the equity market too, by selling his stock, selling MicroStrategy, and buying more Bitcoin. And he's talked about this about having a 3-year plan of buying, I forget how many billions of dollars more of Bitcoin. He's the largest owner of Bitcoin, in the planet, as a company that holds Bitcoin. But now, since they've implemented this wild strategy, it's not going to trade higher than the price of Bitcoin too much. It's going to trade more in line. So Charlie, there's not a lot of companies that are going to be trading at a multiple of what they own. That's one of the reasons that we bought MicroStrategy earlier, but because of that, quote, potential of having a short squeeze, but we're not so thrilled with what he's doing because he's diluting his stock. And we think that, that's probably an accident eventually waiting to happen. But as long as Bitcoin is going up, he's continuing to grow his asset base, but he continues to raise his average cost. And, which we find that disheartening a little bit.
But you can buy options these days if you want to leverage, so there is no need for MicroStrategy.
Yeah, you could.
What do you think about MicroStrategy stock currently?
It's a no-go, really. It did turn today right here off the low, but there's that key reversal, and we actually we sold all of ours that day, right there. So all this, we got a double out of this one. We were up 100% in this trade. We had a 10 to 15% position here, and we sold it all on that day. We tried it back right there on the turn, sold it the next day right there, and we've been out of it since then. So it's not acting great. It's not acting right. You have all this overhead, and this is really what we talked about, having this compressed chart where you've got this blow off climactic top, and you got this compressed, right side here, and with a lot of overhead. So, you can clearly see IBIT looks better to the eye than Mr. does. So we got this trade there. And so we're not in any rush to buy it. You're not in any rush to buy it. So let me go through a couple more of these, and then we'll open it up. Reddit to us has the best fundamental story and the best earnings growth. You look at the earnings growth. They lost $4 this year. They're going to make 75 cents next year. And this is the earnings surprise that I'll talk to you about. See where the stock was up 10%. Let me see, how much was the stock up? This is in the next few weeks, you're going to start having companies that report earnings. When you have a setup like this, keep this in mind. These are buys, not sells. So many of these stocks, they're not going to be on your screen. You're not going to see it until they report their earnings. And in many cases, you'll have the night before to look and evaluate based on how it's trading after market. So it's important that you look at how stocks are doing after market to see what's up and see what's down the most. And if it doesn't report after market, they're going to report before market. So you have to be there during earnings season and be in front of your machines to see that, to know whether or not the stock should be bought on the earnings report, on the gap up. But the stocks that have the most powerful moves are the stocks that are up 10% in price. Look at this. This stock was up 42%. And volume was trading at 658% higher than normal. So that, most people would look at that and say, man, there's no way I would ever buy a stock up 40%. Have you lost your mind? But I have a whole list of these that this is the exact time that you should be buying based on that particular activity on the opening. And the strongest stocks, additionally, when they have this explosion in volume, they don't take out the low of the breakout day. So if you bought this stock, you were never at risk of getting stopped out. And, this stock was 100. And so the stock went up 80%, before the next earnings report. So that's what I'm talking about from swing trading and really position trading, that we're waiting for these now. Earnings season starts tomorrow in the banks, and we'll have more banks Thursday and Friday. But this is the action that you want. That's the action that you want to be revealed. And if you identify that, that's where some of these new market leaders are going to come from. I have a whole list from Amazon, and I have this on my screen. Amazon 10/27/2017, Google 4/22/2005, Netflix 1/28/2010, Apple 1/25/2012, Tesla 10/24/2019, Meta 7/25/2013, Fastly May 7th, 2020, Datadog 5/12/2020, Upstart 8/11/2001, Affirm 8/30/2021, Teladoc 10/31/2019, DocuSign 3/31/2020. So those are historical. Those are historical. Those are stocks that have changed my life over the last 20 years. And they all start out that way with a powerful breakout, 2 new highs on normally an earnings report. And, and again, the great, some of these leading stocks, again, they normally last, 6 to 8 quarters. So they go for a year and a half. And that's all you need to change your life, is to have a concentrated position in something like that, like NVIDIA, that you happen to pounce and got on top of, and you happen to get a 10-bagger, and that changed your life with that one position. If you saw that coming out of the correction in 2020. So Reddit, one of our favorite fundamental technical positions, Rubric, which is in the security area, and IPO. See, look at this, where it broke out on the earnings report right there. And that's why, and we bought this and added to that, I think yesterday. And we'll probably, and the risk in something like this, and we just have probably a 2.5% position, I think. But your risk is right here to the 50-day. So you can see, and this is also, by the way, guys, your strongest stocks, they don't stay below the 21-day more than 2 days. So you can see this is the purple line. So your 21-day, in this particular case, see, look, there's the 2 days. Got below it 1, 2, and then reverse. So this is where there's your ultimate stop right there. If this stock would take out that low, because your risk, and this is what makes it a little bit perplexing, because your risk is to the 50-day. So, but the strongest stocks never trade right here below the opening day. See, it got right down there to it briefly and then closed on that reversal. You had that key reversal. That's where the institutions started buying it the last 2 days. But your downside is the 50-day. See, if this market comes unglued, like this can be like Palantir, and this can go to the 50-day, which is 13.8% from today's close. So there's no way that I'm going to ride it all the way down to the 50-day. So for me, if I'm in this position, knowing that we have this important news coming tomorrow, I'll probably use yesterday's low as a stop right there. That's what I'll probably do, because, again, I don't want it to, I'm not going to take 15%, 20% loss in something like this by letting it go to the 50-day, and then it may not hold the 50-day. So that's how I'm going to handle it. You got your key reversal day. That's really where your stop is, but you should give it to that. You should give it to there if it's predicated based on your position size. So, if you have a 1 or 2% position and you go down 13%, that's not impactful on your portfolio. That's not going to be that discouraging. But you don't want to have a 10% position going down and losing 1.3% in capital from here. So it's all, so it's important to be aware of that position sizing for that. But an IPO that broke out to new highs, and that's, very, very good action. Earnings came out, it had that great signature that I mentioned to you before, and that's why we find it attractive. And I'll just I'll take you through this last one, and then we'll again look at more stocks that you guys want to talk about. And guys, by the way, feel free to, if you don't want to, stay online. We typically close this meeting at 9, but officially from 7 to 9. But we're, I enjoy talking about stocks so much, sharing our views, that we always go over, and we'll probably, so we're going to stay here until my voice runs out. But rubric right here, IPO, new merchandise, that's important. And then let me pull up Vistra. See, everything should be looked at from everything should be looked at, first of all, from a fundamental basis. Like, what does the stock do? What makes it important? What do they do that their competitors don't do? Are they the leader in the industry group? All that stuff is important. And then you have to overlay that with these tools. And these tools are important, and it's described as technical analysis. So technical analysis, which is based on price and volume, that's going to give you a picture if you have been around long enough, and if you've had if you've been seasoned enough to make some good decisions based on what you see and so forth. Now, Vista is we view this and GEV as the potential leaders in the market right here. And, the stocks broke out. We bought more of this today. We averaged up at an all-time high, and it's got remarkable resilience, and it is a great company, great market cap, $58 billion. It's a big company. The relative strength line is breaking into new high territory, which is a clue that that's where the leaders come from. You want to be screening the stocks that have the highest relative strength, and at important market corrections. And you can see that this is hitting that blue dot. It's a blue dot breakout. I'm not exactly aware of how IBD, what are the criteria to get on this blue dot, but it has to do with, it's got to be in a base, and it's got to be near a 52-week high, and the relative strength line's got to be making a new high. That's normally where your leaders come from. And you can see they have terrific, this is a utility company, and they're in that alternative energy area where they're selling electricity. And again, this is going to be the new oil in terms of this is going to power our economy, electricity. There's going to be an insatiable demand for electricity to power these data centers and to power these large language models, and to supplement and augment like disasters like which is occurring in California right now. So stocks breaking out. Look at this perfect cup, and the handle right here is 1, 2, 3, 4. It's really a 5-day handle. Very, very short, but it's short, quote, stubby, but the stock is breaking into new high territory. If the pressure comes off the market, look for this stock to go materially higher. And let's take a look, always take a look at the weekly. I mean, look at how tight, and see, remember I told you these leaders, they go through periods where you have 5, 6, 7 weeks up. That was telling you the strength. That was telling you the strength in the stock. So it's always helpful to look at these stocks that have the highest relative strength, pull up the weekly to see, well, how long have they continued their ascent, and and the most powerful stocks, they blast ahead week after week after week, and that certainly has been exhibited in this case.
Hey Roy, what's your take on CEG, the competitor, after yesterday's gap up?
Well, I bought it today personally, and Wes and I talked about it. It's perfect, really. And what makes it interesting is well, first of all, they've signed some agreements. They're going to provide. Remember, CEG is going to reopen 3 Mile Island, but they're not going to have revenues for another 3 to 5 years from that project. But that got everybody hyped on the position. And then they turned around and bought Calpine Power, which is for $16 billion, I believe, which is a huge power producer. So this is what got my attention. So they bought Calpine. So the market liked it. See, it doesn't matter what the news is. What matters is, well, did the market like it? So there's the volume breakout that we've talked about a number of times tonight. It came in one day and then turned up. And so this is one that we're considering buying tomorrow. But the question is, we have 10% exposure there. Do we want to go to 15? And we might. Wes and I will just have to talk about this in the morning, but we are talking about it. But
where would you buy it? Where would you buy it? Where would you buy it? Taking out the high or taking out?
Yeah. Take it out today.
And did you mention, really why we hesitated on this is because we already have 10% exposure. I don't know. Did you just mention that about how we have 5% VST, 5% GEV? Do we want 15% to that same theme when it's the same idea, really?
Yep. So, great action. It's, again, you want to look at the stocks that are first out of the gate coming out of the correction. Now, we mentioned app, and Wes and I, and we've talked about this. We missed Kava and we missed app. And now take a look at this. So, app. Now,
sorry, Roy, for interrupting you. And to get back to CEG just for 1 second, where would you buy it? Like taking out the high of Friday, which is like 305, something like that? Or
taking out today's high tomorrow.
Today's high. Okay.
294.41. I actually have an alert right there. So taking out, if it took out that high, yesterday's high, today, that would have given me additional information. Like I was watching that if it did it today, and it didn't, but it is turning, and you have that big explosion. So this is one, if it takes out today's high, this is the buy from a short-term trading perspective. Now, again, remember, guys, we have disclaimers. This is by no means are we providing any financial advice. You have to be responsible for your own decisions and counsel with your financial advisor to make those decisions. But this is how I would handle it. I'd buy it taking out today's high, using the stop at yesterday's low right there. So, and position size accordingly. So that's not that much. So that's 294 to, what's that low roughly? 280, 10, that's, it's like 4 to 5%. So, and again, as one of the participants said earlier, what do you do about getting stopped out? Well, we get stopped. Well, first of all, we get stopped out of 100% of the time, eventually, every position. So it's a matter of when, it's a matter of protecting your downside. We get stopped out of 100% of every position all the time. And that's a record that can't be rivaled. So it's not like you never get stopped out. We always get stopped out. So it's a matter of navigating and jockeying for position while you look for while you observe, and as you become situationally aware of what's happening in the market around you.
Could you please review Tesla?
Yeah. Wes, are you still here?
I am.
Wes, why don't you review this? Let me have a break here and just review this Tesla trade. I've got it up. You can see it on the screen there and just review this.
Okay, sure. Yeah, one of the things that we probably, first of all, that we probably did wrong on this is not buying it yesterday because we were talking about it at the close. It was winking at you, and so that was a better entry point. Um, but we bought a small position today. I think we're in at about 413 or something. And are immediately down. Okay, and so that's where we stand. Um, and now it's building this down trend line. It's kind of like the Russell. It's kind of like the RSP, right, where it's showing that strength early. So that's why we went for it. And one of the things that we wanted to do was buy things that are perhaps up the most on this day instead of looking for the laggards that haven't moved yet, right? And you're waiting for them. But we took a stab at it. We're gonna have to honor that low, obviously, from yesterday or 2 days ago, and that's that. We'll get out again. It's a pilot position. The overhead is just like Palantir, kind of. You've got that sharp pullback, 20% pullback. And the fundamentals continue to kind of attract us to it. I think it's a tough animal. It hit all-time highs. Thanks for just throwing that out there. Okay, it's down 19% from highs. Now, so that had that green line breakout, and there's all that Elon Musk enthusiasm, but it bottomed on a bad number for one. That's one thing we noticed a couple weeks ago. They had this bad delivery number, right? They reported their first um, annual decline in vehicle deliveries, I think, like ever. And then the stock the next day, made a stand and was up like 8% or something. So, that's kind of telling you maybe that the bad news is in. And for me, they're the kind of the epitome of innovation and what they're doing as far as changing the way we live. So, it's just got to be on a radar. And with all that potential upside, I think that there's a lot of people that have high conviction and what he can do. I guess Roy, you're drawing some trend lines there, and I'll just say that green line breakout at 2019, that was the Model 3, right? So that was their game-changing innovation there. That scaled them up, tremendously. And now we're sitting here, FSD, robotaxi, and robots. I think in the meantime, I could see FSD driving earnings and improving margins significantly. If you watch these videos of it working, or maybe there's people here that have the Tesla and have that version 13, the reviews are outstanding, where it's just it really improves your life, and it's like $100 a month, and it's this, it's a new product that's out there that a lot of people are opting into. So we'll see. I mean, that certainly is going to help drive earnings, and they just got to keep delivering though. But I think in the meantime, hopefully that does support earnings and margins and everything. And most importantly, it's at all-time highs, and he's got to deliver just like he always does. He has to do that, and um, maybe it's not ready. We'll see. If there are several delays and all that, but it's been at the top of our list, and I mean, it's not. We haven't messed around with it for 2 years, and maybe it's time, right? They finally are near this launching pad of delivering a really, really meaningful FSD product and things like that. But anyways, that's the trade. I mean, we are immediately down in it on day one, which is frustrating. But we bought it. Yeah, we did buy it post earnings, I would say too, back in October. Um, they tried to shake you out really hard ahead of the election. There was some obvious election risk with Tesla, where he had kind of gone all in. I think we took half off the day before the election, actually, or the 2 days before the election, we took half off, and then pre-market we put the rest of it back on as it was gapping up, 10% or something that day. So we wrote it, and then I think we probably sold it. We sold it early, maybe 400. Yeah, we definitely sold it early when a lot of other stocks were topping and it reversed lower. But yeah, we're back in it again. It's first out the gate. We're trying to think that the first out the gate stuff is gonna power ahead. So I don't know. Those are my thoughts. It didn't hit the 50. It's not yeah, again, that's why we're dipping our toe in. It's not, it's not the perfect setup. It's not making all-time highs, which we really prefer, right here. There's that overhead to contend with. It's like it maybe is like the MSTR base that we talked about too, where it's kind of a sharp and stubby uh consolidation, but I certainly have more confidence in the fundamentals of this than MSTR, and it's an early entry.
Wes, can you have a look at GLBE on the weekly chart? Interesting. It's got some good earnings growth.
Wes?
Yeah, am I still here? I mean, am I still in? Yeah, I mean, I don't have any thing is I do better when I understand the company for sure. Talking about it, that's a big part of my background and process. But yeah, I mean, there's nothing bad to say here on the weekly. Obviously, it's
I just like the way, like, I mean, if you look back in 22 and 23,
Yeah.
the trading is getting tighter and tighter. It just seems to be
Yeah.
like it's really wide
yeah,
loose, and then now it's just trading on it's got a different personality to it.
Yeah.
Seems.
yeah, I agree, and I think I don't really care about the overhead way back either. I don't think that's a huge deal, right, from 3 years ago. And what I like to see is them turning profitable. I think that's a big inflection point, in a company's uh, future too. And you can see how impactful it was just for Reddit, right? Because Reddit is this IPO. It's supposed to be a loss-making company, right? Like that's what IPOs are usually still making losses. They raise capital, they scale, and they turn profitable. And it's a big deal. And Reddit clearly hit that milestone early. Um, I'd like to see Globe here do that as well, right? I would imagine, that's something to keep an eye on for sure as far as the earnings gap um, potential there too, right? They
Got nice steady fund growth too.
But if you're here, obviously the growth is good and continues to be good, but yeah, I mean, sure, it's held up well. It hit that 10-week, right? And it looks great. I mean, it looks great. This is the exact kind of setup we're looking for, right? Where it pulled back, and on an ugly day like today, earnings gap up, great, which drifted higher. It's really not pulling back a whole lot. That's like, that reminds me of a lot of things we're trying to buy today. We like those things that are perking up the most out of these pullbacks because, something like this could be up huge tomorrow if the market's up. If the market's up 1% tomorrow, let's say, that thing it could easily be at all-time highs. Or not all, but it'll be 52-week highs. It could easily take out 58. That's the kind of juice you could see in something like that. On a somewhat favorable market day.
Yeah, and this recently came to my attention, like recently in the last week or so. And again, we missed it right here, but it looks very similar to this CRDO that reminds me. Yeah, let's take a look at those. It's some of the semi stocks, but see how this CRDO broke out and so we've been out of this for over a year. Because a couple of years ago, this is the one that I'll show you where we got thumped on, or I got thumped on, maybe in my personal account. I'm not exactly sure if we owned it for client.
I think almost everybody in our universe did on that particular day, but I don't know if I actually don't think we owned it because it was kind of small. It was like at the time it was probably a $2 billion company or something.
Yeah, but there's a signature, guys. See the volume footprint. It hasn't taken that out. And then this is great right here because, and we're looking at this because if we have a good reaction, and again, it doesn't matter what the number is, it matters is the reaction. If this stock takes out, today's high or it's, or if the market is showing you some strength early on, you can buy this using a 1-bar stop. This is really an ideal place this is an ideal setup where you're trading near the danger zone. See, also look at it at the 21 day. So it's above the 21 day. It's been consolidating. It's tried to go, but the market's kept it back. And earnings are in 43 days. So you have enough time here to initiate a position and maybe get a cushion going into the number. But what you would like to see is if this market turns, you're going to be looking at 80 liquidity. So if you buy this stock, and I bought it personally yesterday myself when I saw the reversal, but we didn't put it. We didn't put it in any of our clients' accounts. But I'm gonna probably press it tomorrow, taking out today's high, and I'm gonna honor that yesterday's low for a stop, which is very, very tight. See, it closed at 69.39, and where's your stop? Right, 67, $2. So you can buy 1,000 shares and risk $2,000 to make 10. And so you've got 5 to 1 upside to downside. So that's very attractive. And again, if it gets to new highs, it's going to go further. So you can see once it gets to all-time high territory, that's really where the move is going to take place, above there. So this is one of those nuances. You're guessing this would be called an early alternate setup initiation. So right there. So man, that's a real tight stop. If the market, if it's unfavorable and you come down and you don't take out that low tomorrow and then turns up, say we get a gap, the market gaps down and then reverses, that would give you that'd give you even a more attractive opportunity. But you don't want this stock necessarily to take out yesterday's low right here unless the market cooperates, tomorrow.
Hey, Roy.
Yeah.
Mike Myers here. I was curious if you had an opinion on Rocket Lab. Unfortunately, I first heard about it from CNBC, which is never a good source to anything.
Yeah,
but
that's like inverse.
I'm waiting for a trend line break, maybe.
Yeah. I don't know. It looks to be, this is definitely climactic action. And again, it got caught up in the space, and there's the election right here. And so, this is all because of Tesla and Elon Musk.
Oh, sure.
SpaceX and rockets and all that. But, they do have numbers. You can see that they have numbers here, but this got ahead of itself. I don't know how strong this company is, and I don't know, how many rockets and spacecraft they're going to do. I just know that, that SpaceX is the leader, undisputably the leader. And so it looks somewhat climactic. It's, I don't really like it. I don't like the setup in the chart. It looks like it's making this rolling top here. So you don't want to get,
right.
We don't know the fundamentals of this company greatly, but you don't want to get caught like in those quantum stocks. I can't believe no one's mentioned these quantum stocks. Look
it's awful.
20 to 5 in 5 days. So 20 to 5, and all these that moved up on hype and that have no products and no products that are coming to the market anytime soon. What got this going to the downside was Jensen Huang saying that you're 15 to 30 years from really being produced and being commercially available in these. And so all these stocks, QMCO, they all, look at this, 90 to 24 in 10 days. I actually tried this. I couldn't get this. I tried this on that day, couldn't get it. I was short Rigetti, RGTI. but I couldn't. That was the only one available. So QMCO, QUBT, and this is how people went broke here. That they bought something that was just going up based on the short squeeze, based on the hype that had nothing. Look, no revenues, $100,000 for the quarter. $1 billion company market cap with no revenues. So this was all hype, and you were penalized for it if you stayed
pump and dump.
If you stayed around the party. Occasionally, I'll look at these. Like I got a nice trade out of SOUN, and on this move here, got a really nice trade on this one. And I think we actually put it in and made 50% right there in the course of, I don't know, 4 or 5 days. We did take it off, and then it continued to go higher. Now it's coming in all the way back down here to support. But SoundHound, which is interesting because it's an AI voice company that has a total addressable market of the world, and NVIDIA's got a piece of the company. That's what got us interested in it, and we played this hype train, and we didn't stay around. We had one trade, made 50% in it, and moved the needle, but it's come all the way back down. But it's a tiny company, small, but the total addressable market here it's enormous. So I would, you're going to probably bounce here and get at least an oversold bounce in it back here to the 10-day. And that's about a 20% quote trade. The 10-day is 22%. So if you see this stock, and this is definitely from a speculation standpoint, when you see something come unglued, you normally have one reflex bounce that you can trade, and that reflex bounce normally after a break like this, you exit in it. So there might be a trade here. We're not going to probably play it, but that's how this moved along with the quantum computers, which that's one of the reasons that we got very defensive, is because we saw this going on in December too, saying, man, this doesn't end well. This is what market tops or look like when you have pure crap going up on no numbers, and then the media, everybody gets hyped, and then they road pull it because they have no fundamentals in the quantum stocks.
Hey, Roy.
Yeah.
I would like to ask you more about position sizing. I mean, let's say that you have 1 million account. I know that you manage money for customers. So how many positions do you have within that 1 million account? And then what is your initial buy? You said that sometimes you just put 1 or 2%, but what is your target? Like your final target if the market is cooperating, and then what will be that initial buy?
Well, we typically have, we have 12 stocks right now, and we typically don't go over 15. And we're somewhere between 12, depending on the type of strategy, if we have a little longer view or a swing trading view. But we have ideally in a swing trading strategy, with $1 million, we would have 10 to 12 stocks ideally, and 10, with roughly 10% positions. But when you're just getting started, like every year's a new year, and coming out of a correction, you don't have 10% positions because the market is unsettled right now. So you have to be, that's why right now it would make sense to have no exposure. Like if you're swing trading, we're in this short-term downtrend, but we're just looking at the weight of the evidence, and the weight of the evidence says, man, we're probably pretty close. We just don't know if we can get the whoosh down. We're looking at the sentiment, and Wes went over the stocks above their moving averages, McClellan oscillator, things like that. That's suggesting that the majority like 75%. We'll find out it could be 100% we're done tomorrow. If we have a nice reaction and we power ahead and have a follow through day tomorrow where it's up, where the NASDAQ's up above 1.7% on higher volume than today. So that's how we handle it, like 10 to 15 stocks. And when you have conviction and you're up nicely, you know when to press the pedal, and we're not pressing the pedal, and that's why all of our positions are like just token positions. But a real position isn't for us. A real position isn't really a committed position unless you have 10% in. So we're like right now, because of the market environment, we're not going more than 5 because we're unclear about the market environment. So the market environment should tell you your position size, and you also should gauge your position size and the number of stocks that you have by your conviction in that individual stock and how well the feedback that you're getting in your own account.
Thank you.
You're welcome.
Roy, where do you guys put your stops? Like when you have it like at the bottom of a reversal bar, like the day before or something, like we're discussing some of the stops. Do you put it right at the bottom of the bar? Because sometimes it just undercuts, slightly intraday, and then by the end of the day recovers. Like, do you wait until the end of the day, or do you give it like 1% below the low of a bar or something to let it, undercut and go up or something?
If it's a key reversal day, that's where your stop should be. Like we saw, who had the key reversal day that we were looking at? Well,
I mean, Palantir could be one potentially. I mean, there were others I know, but
that's not really that. That's who else? Let me see. Who key reversal day? Or did RBRK do it? Yeah. See, there's your key reversal day. See right here, right there. So if you bought it, and I think we had some and bought it. We had some and bought more yesterday, but there's our stop. So your stop, there's the key reversal day. Your stop is going to go there. But again, we discussed this where, man, it can come down if the market, doesn't cooperate, it can come down to the 50-day. And, so we're not willing to I'm not willing to let it go down 13.5%. So we're going to, in this case, we might even use today's low for the stop. If this market opens, and it's nasty tomorrow, we're just watching these 2 days. Once if it follows through and breaks this downtrend line, and by the way, you can see how I have this downtrend line. So this was, if you didn't own this position, it was Tesla that had the key reversal day. Right here, there's the key reversal day. So this is the way, as a seasoned trader, that you should handle it. Like you're watching it, it's coming to the 21-day, 2 days below the 21-day. That's where it should find support. And so if you bought it right there, that's good. And then you've got this, it's got real tight. And then so what you would do, the way to handle it is, if we're good tomorrow, we're going to probably press ours right there if it takes that level out. And again, so we're going to average up. So let me see, that should have. See if this shows up. So this is how you would approach it. So you would buy more here. This would be one. And again, what we're doing is we have the stocks that we want to own. And again, some of these others like A-Lab and CRDO, Coherent, stuff like that. But you would buy it, taking out today's high. You would add more right there, taking that pivot out. right there. And then you would want, add here, add there, and finally finish your position up right there. And you would, I would want to have, if it acts the way that we expect, I would want to have like a 10% position right there. That's how you would handle it. So we're not averaging down, we're averaging up, and, we're looking for the levels to hold, levels of support to hold. If it doesn't hold, we're out. So our stop is going to probably be yesterday's low. Maybe, maybe that low right there, maybe we might give it to that key reversal day, but you take that key reversal day out, you've got to be out, because, we're looking at this market environment. And and Wes showed you the declines that we've had in the FFTY and the NASDAQ compared to other times in the FFTY, the RSP and all that stuff. So we don't know where this market is going to go. We're in a short-term, treacherous period of time. But if and it's okay to be totally out, but if you don't have any exposure, and everything that you've heard, and we've talked about the bullish argument, and everything that you've heard, it's going to be very difficult if you're sitting on cash to act tomorrow, at the open and, throughout the whole day. And again, there's no assurance that the market will close strong, even if it opens strong. So that's the kind of information you got to have. We felt like, we needed to have exposure so we don't chase, and we got the right stocks. We feel like these are the stocks that we want to own right here, and as well as others that we're watching. And, just to give you another idea, like that Reddit trade, see, this is a great setup. And this is A-Lab, and this is the number one, along with Avongo, Broadcom. This is really the number one semi stock in the universe right now. And see, remember, the real move takes place when it gets into all-time high territory, which was that day right there, when it broke out to new highs. That was the time where you could buy it on the pullback. It didn't take out that big move down. See, look at that 10,300 that I'm talking about. Earnings were up 900%. Blew it out. They blew the estimates out by twice. They beat the estimates by over 100%. And this is why. And you have this little double top. It's going sideways the market. And look at this. See, there's your stop. See where I have the alert.
Yeah.
There's where you exit. So today it was a buy. But we felt like we had enough exposure, right now, and we didn't want to have more exposure. We're a little over 40%. We went from 25% to 40% long today. But if you bought it today, there's your stop. See, it's so tight. And it coincides with 2 days below. Again, 2 days below your 21 day is normally when the model stocks bottom. So we're conscious of that, but we're wary about the market. But if you bought it there, your stop is so tight, which is great. So, and so they have impeccable fundamentals. You can see the earnings growth, 200, 190, 218, 900%. See, this is where the leading stocks come from. They're powered by earnings growth. And look at the revenue growth, up 148%, 270, 619, 206. See, those are APP type numbers. See, look at this APP. Look, and there's the breakout. And it would never come in. And, the leading stocks, look, it never got to the 21 day. This above the 10 day, the whole time, the strongest stocks operate that way. And so you're waiting for the pullback to the 10 day or the 21 day. When it broke out here, at 200, it only touched the 10 day 1 day before it doubled. So we totally missed this, totally missed it. And there was your time to buy it, September. Where's the November, 5th. See if it had the numbers. And look, we bought November 5th and we bought November 6th. And we were 100% in the market. We didn't buy AppLovin. So why didn't we buy it? We just we missed it here on the breakout. It never came in enough. It never came into the 21 day, which normally you would buy. Never came in so strong that it just melted up. And now it's going through this consolidation, but the numbers are terrific. On the stock, but that's one that that was a life-changing opportunity. And this year, we had a year that changed many of our lives, this year. But, but we missed this one,
So Roy, when would you buy this in future?
It's kind of, I don't like this pattern. I don't know. It tried to break out like right here a few days ago. And now it's come back in. I just don't know. They're in a nice area. Their advertising model is apparently, quite proficient. I just don't know. I don't know where we would buy it. Don't have a good angle on it. Normally, this is definitely climactic, 100 to 400. It could be over. It could be over after this price appreciation. So we're not. I don't like the look of the chart. It's had its move, and we don't want to be in like an SMCI. When there's your move on SMCI, and we actually missed this for clients, but we bought it. I did buy it personally there, and this just shows you how the pros get it wrong too. And I think I made like 30% in 2 days in the position, and I sold it. We didn't have it for clients. I sold it after making like 30%, and I had a large position here in it. And then look, it proceeded to like triple from where we sold it. And look at after the fact. So FMCI was the rage. And then look at what happened after that climactic view. I'm not saying APP is going to do something like that, but once you have the move, many times it's over and everybody else is trying to buy the pullback and they get chopped up, get stopped out. And, we don't want to get caught, in that scenario.
Hey, Roy, I have a question. What is your take on the following two stocks, Wix, and the second one is Stride? Wix and Stride.
Okay, I'll take Stride first. No, I was very interested in this, and this is what got my attention right here. And right there. So notice, this is interesting that we have so many of these that we're profiling for you today, guys, that look, there's your entry. So be aware, stocks that break out and go up on big volume on earnings this quarter that start tomorrow, essentially, those are your potential leading stocks. So LRN, I love the business. Well, first of all, this stock had like impeccable numbers, and it was at an all-time high, and then the stock proceeded to collapse, and then they reported earnings this day here. And I read the report, and I think Hindenburg put out a short report on it saying that all their numbers were fraudulent, fake, and everything, and it scared me out of the position. So I want like good things to be said, and I want a bullion action, and I want Wall Street on board. And the report this is the report from Hindenburg dropped it from there to there. That's when the report came out on Hindenburg. So my mindset was, man, look at this. It dropped from 90 to 63. I don't want any part of this. So I'm passing just because there's a lot of fish in the sea. But, this is actually, you had the great setup. Now it's going sideways. It's a, it's a decent, it's a decent chart that's setting up here. I'm just afraid of the fundamentals. Earnings are in 14 days, so that doesn't give you much time, but that's the way that I looked at it. And, the report scared me. I read the report, every page, and I said, oh, you know what? Oh, crap. I don't want to take a chance here, even if they're totally wrong. And of course, it's come all the way back. They were right. And now this is the short covering that's taking place. And what was a Wix and GoDaddy, they're moving today. So we didn't buy this. So, this is what you should definitely, you had a classic breakout. You had there's the earnings period. You had the classic breakout. Not bad. And now we just sort of missed it. But, you had a pivot at 229. So your pivot there, it's at 230. So if this would come back into 230 tomorrow, I would, just 230, that'd be down $6. And if it just jockeys around here, if it comes in, this would with the big accumulation these 2 days, this should be on your watch and buy list. And in fact, it's on that buy list that we have. It's already in the list, Wix. So that's in the buy list. So it's great setup. The numbers are great, and solid numbers. And GoDaddy, GDY is in the same group, and GoDaddy doesn't look quite as good, but look how tight this is. I mean, this is really what you're looking for. This tight action, stair step, move up, come in, move up, come in, move up, come in, move up, come in. This is classic action. So this looks great. And but the Wix is the leader because it's the one that broke into new high territory first.
Roy, did you ever look at Amazon?
Yeah.
What would it take for you to get into that if it's good news tomorrow?
Being up, and taking out yesterday's high tomorrow.
Okay, so it's sitting right on the 50 now.
Yeah,
right?
yeah. So that's what would take me to get, that's what, but what makes it a little bit difficult is, see, we've talked about like this potential rotation that's taking place. Man, we got to see. This is where the liquidity is. So this is where the institutions are focusing. But are we topping? We topping here? They don't look great. I mean, Google, same thing. I mean, this doesn't look great. And, I mean, look at the opens and the closes at the low. So bad close, bad close, bad close, bad close, bad close. You see what you're seeing there? Bad close. Like, man, this isn't great. I mean, every time it's trying to go up, they're selling right into it. So this might be that rotation and I don't have that answer. Yeah, I don't have that answer. Like, right now it's just, these are things that are a little bit troubling that you see. And you're seeing, I know what I want to see. And it's not what I want to see that's going on here. Meta's got a far superior chart. See, look at this chart. No, Amazon, they have, I think the fundamentals are impeccable, and the group is ranked 9th, and it just needs to turn. But Meta, look at the chart here, which just broke out, going sideways. I would be more inclined to buy this Meta taking out today's high than Google or Amazon. Now, this Brothers broke out. So we sort of missed it again. We saw this, but this Brothers moved out today. So this is on our buy list as well. And if you didn't buy it, you chased it today. If you didn't buy it right, and earnings are in 36 days, but it is firming up, and they have decent numbers, and it has been pummeled and going sideways for weeks. And now this does have all this overhead, but there's the overhead 18 months ago. So this is where it is 18 months. So it's way higher than, the anchored VWAP is much lower than it's trading right now, which is supportive. But that's Dutch Brothers. You should keep your eyes, on that one.
Roy, have you looked at Chef Warehouse?
Yeah, it is. I don't know if they have a. Do they distribute? I think this is I think it's all mail order. I think I've ordered from these guys mail order, but this is not. It's not a bad chart. I mean, the numbers aren't. The numbers are okay, but the stock's breaking into 52-week high. Why is it doing that? So this is really good action. So it's a $2 billion company. And so the action's good. So it's thin. So it only trades, look, for couple $100 million a day. It's thin, but you do have really good action, and you've got a keen eye. So you're definitely looking at the right place. Earnings are in 29 days. Good action. That's how, it's a fairly small company, $2 billion in market cap. So it's no institutional favorite. Let me see if you got anybody from Wall Street following this stock. Yeah, you got some of these. You got Federated. And by the way, I don't know if someone's on the call that asked about the IBD, the mutual funds, the ownership. Are you still on the call that you sent that, put that in the chat? If you're on the call, just let me know and just rephrase that question for me.
What's your take on Planet Fitness?
Planet Fitness looks good, PLNT. So this is another one. This is winking at you, as well. So this is the kind of thing that, I looked at it today. I saw the action. It's been it's under accumulation right here. Broke out. This is like really good action. There again, there's your explosion day. The numbers were, I've been a member of this place before when I used to, quote, exercise. I don't exercise anymore. That's, my exercise days are over, but I like to exercise the mind here in the market, and the physical exercise, nah, that's not for me anymore. But they've got a great, in fact, if you've ever been in one of these massage chairs, they've got a superb massage chair. I might sign up again just so I can go use their massage chair. Although I am exploring buying one of those for myself. It's the only one thing in my life that I actually want. And so that would be pretty cool. I'd love to have a massage chair and here on my desk, but I guess that wouldn't fit. Anyway, you've got great action here on Planet Fitness. They charge like $25 a month or some nominal fee. It's breaking out to new highs. It is the January, everybody's starting their fitness cycle. I don't know how long that's going to last, but you got good action, right here. It hasn't done anything in really a number of years. It is, but look at this. When you look at these things, on the monthly and weekly. Look at how the monthly chart looks. And, you had that monthly run where you had that big move. Then you had all this digestion, sloppy action. Now it's kind of resuming the uptrend again. So that's a green line breakout like today. And that is important, when the stock makes an all-time high in price, not just a 52-week high, but an all-time high in price. So this move could be just going regardless of the fundamental numbers, which aren't that impressive. 8% earnings growth, 5% revenue growth. That's not inspiring to me. So that's why I would be somewhat hesitant to buy it. But if you had robust numbers here, I would be very interested. But the numbers don't inspire me.
Can I ask you some? You have talked about in the past taking GLP drugs. What is your personal experience? Do people stop taking them after a year? In the media, it is reported it's not they're not many repeat user, like people take and then they stop, things like that.
Well, so you asked me a personal question. So what is my personal experience?
Yes.
Okay, so I am on Mounjaro right now. And Mounjaro, which is the drug that Lilly, that's Lilly's version. Ozempic is Ozempic is
Novo Nordisk. Novo.
Yeah, Novo Nordisk, yeah. And so, the data has shown that Mounjaro is much more effective than Lilly, than their drug. And of course, I took it to lose weight, and I lost 75 pounds in 2024, and on it, but it is super expensive, and my prescription, so it's filled monthly, and I paid over $700 for a month's supply in January. So it's very, very expensive. And I've lost the weight that I wanted to lose. And I'm actually meeting with my doctor in a week or so, and we're going to try to. How do you stay on it? How can you stay on it? How can you dose yourself so that you get off of it and you're, and you just get on a different plan. I'm not interested in losing any more weight. So, and then you have competition with, with HIMS, and, some of these other companies that are trying to get into the space by providing the compound that makes GLP drugs. So anyway, I had a great experience with it. It's terrific because it curbs your appetite so that you don't have headaches and you don't have any appetite. It curbs your appetite so you're not hungry. And so I've had a very good experience, but Lilly has had its share of disappointments. And this is why, and Lilly was a big position for us. This is why you have to, all this stuff that sounds great, that is in gear. A lot of these stocks are in gear at various times, but then when they get out of gear, like here, there's your sell date. And I think that's probably where we sold Lilly, right there on the gap down on big volume on from a new high. That's where we exited. So I got a phone call from a family member that has a friend that retired from Lilly, wanting to know what to do with it now. And it's unfortunate. You make all your money in something that you hold, and you think that it's going to continue. But if you're not aware of the signaling and the troubling sides that are before you, that are clearly there, and have an exit strategy, that can really damage your net worth. So you have to, all these things that we're talking about tonight, all this stuff is fleeting. It works until it doesn't, and you have to just know how to navigate around, and you're going to get caught in situations. And again, if you should, most people should be stopped out 100% of their time in history. Even if, what I've been unable to do is I've been unable to hold something like an Amazon, and I've had, heck, I had 1.7 million in Google in 2007 in one position. 2007, 17 years ago, 18 years ago. But if you didn't sell it, if you didn't sell Amazon, in 2007 to 2009, it dropped 80%. So if you had $1 million, you can't drop it. You can't let your account drop $800,000. So it's all position size, knowing when to get off the merry-go-round or the train. And this is the way to know when to get out. When there's huge distribution and the stock's down big, normally on some types of earnings, if it occurs after a move up, that's signaling to you that more than likely the trend is over. And what was surprising is that this stock, Lilly, had only had like 1 or 2 quarters of the reaction for Moderna. And so this is something that was supposed to go on for years. But I guess competition and then the government sort of getting involved. Biden wants to, give it away and have Medicare cover it for everybody. All that's expensive for the drug companies. And so the drug companies are, they're certainly not an area that you want to be in when this administration is clearly anti-drugs. So the only drug company that I'm the ones that are showing up is ARGX. This has got terrific numbers, this has been terrific numbers. This is a leading stock, but it's a biotech. And then ISRG that you're all aware of with the Da Vinci system. And this is one right here where this can go. And they just launched, they're having not a rebrand. They're coming out with the latest model. And so this is they're going to grow, 20% a year, probably for the next 3 or 4 years. And that's quite strong. So this is the only medical stock at the moment that we're somewhat interested in. Notice that it's 10% from a 52-week high, and earnings are in 9 days though. So we wouldn't go through that, but you can see all the mutual funds A+ funds that own it. That's one of the leading medical systems stock, which is a little bit different from the drug stocks, medical equipment. Guys, I think I'm gonna call it a night. I think my voice is about had it. And I hope that you guys have learned something tonight. I know I always do. And it's always a pleasure to have viewers like you to interact with. Man, we love talking about the market, and you do too. I want to encourage you all to keep at it. Many of you on this call are very, very successful, and I know many of you personally, and I do know that as a fact. For those of you that are learning, just keep at it. This can change your life, and it is the world's best occupation and vocation in my mind. And I just want to wish you all a great 2025. Tune in, follow us on Twitter. We're very transparent, and that's a great way for us to communicate our thoughts in between these meetings. And you can, if you follow us on Twitter and you go back, you can see that we've been quite prescient in terms of many of our decisions and calls. And so we thank you again for attending, and we hope to see you next month.
Thanks so much, Roy.
Thank you, Roy.
Thank you, guys.
Thank you, Roy.
You're welcome. Have a great night, guys.
Good night.
We'll get this out to you imminently in the next day.